guys, good morning. Welcome to the live session with Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Morning, snipers. Thanks everyone for joining. Happy Monday. We're going to get started in just a couple minutes. Hope everyone had a great weekend and ready to tackle these markets this week. How is the volume on the mic? Good morning, Conrad. Welcome. How's the volume, guys?
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, thank you for joining Stock Sniper Trading. Welcome everyone. My name is Ron. My partner is Dave. It is 6 a.m. Eastern. It is a new week. It's Monday, December the 8th. So thanks everyone for joining. We appreciate everyone. We hope everyone had a great weekend and ready to tackle the last few weeks we have in these markets to wrap up 2025 and go into the new year. We've already had a couple of our snipers message us and say they're done trading for the remaining of this year and they'll be back the first week of January, and they're taking a little bit of holidays. So shout outs to all of them, and I hope that they enjoy the next few weeks and their holidays. So but we got work to do, guys. We're not going on holidays yet. We still got to go into these markets and dissect what's going on and see how we move into the new year. And this week is also very important because we have our last FOMC meeting of the year. That's scheduled for Wednesday at 2 p.m. and we'll also be doing that as a live session as well, okay? And let's just, we're going to go over gold. We're going to do NASDAQ and Dow Jones. But since it is the start of the week, let's just go through all of this week's news. I did mention that Wednesday we do have FOMC, but let's see if we have any other high impact news that can affect us this week. So for today, it's an Italian bank holiday in Europe, and there was some European news that already passed through the markets. And we don't have much going on in New York today. Just take it as another Monday coming off of a weekend. Careful when you're trading Mondays and Fridays. They're always the start and end of a week. It's a little bit different than trading like a Tuesday, Wednesday, Thursday. So just take it easy on Monday. There is some Australian news later tonight in the evening for the Tokyo session. And we're also coming back Monday, Tuesday, Wednesday for Tokyo sessions, but it's going to be a little bit different this week. We're going to be focusing on swing trading. So it's going to be completely different than what we're doing in the last few weeks in Tokyo session, where we're on gold and we're just bringing it down to the 5 minutes and we're looking for scalping. We'll focus on securities, but higher time frames, and we'll look for how to set up swing positions, maybe what to look for, and we'll see if we can find any swing positions early this week and see how they shape out Monday, Tuesday, Wednesday. Okay, so if you're in the want to learn how to swing trade, and those sessions will be great for you, but we will not be scalping on those sessions. Okay. I feel like we do enough lower time trading that now we should be introducing a little bit of swing trading. You can still be a scalper, you can still be an intraday trader like myself, but you could also learn how to swing trade and have the best of both worlds. Okay, so it's good to learn and it's good for time as well. If you got a busy lifestyle, maybe swing trading might be something that you're looking for, and it could help you. Okay, so that's what we'll be doing this week. And tomorrow, there's a little bit of news coming out of Europe. We have in the Bank of Japan, the Bank of Japan governor speaks tomorrow morning, 4 a.m. Eastern, just after the London market opens up. We have tentative right now our US ADP weekly employment change, scheduled for Tuesday. And we also have at 10 a.m. our US JOLTS job openings. This is the job openings and labor turnover survey that will be coming out Tuesday morning over here. We have our US 10-year bond auction scheduled for Tuesday afternoon, just after 1 p.m. Eastern. And then we go back into the after hours and Tokyo session. Okay. Wednesday is the big day. You can see that there's a lot of red news, but more specifically, the entire economy and markets in the United States are anticipating this event over here. Okay, so but until we get there, we have some European news. There is some US news at 8:30, just right after COMEX on Wednesday, about the employment cost index. In Canada, we also have scheduled the Bank of Canada rate statement and the overnight rate. It looks like they're forecasting a pause here in Canada due to the labor market is sustaining and is looking pretty good here in Canada. However, in the US, it's a different story. At 2 p.m., this is where we have our federal funds rate. You can see previous FOMC was 4%. They decreased it down from 4.25%. And you can see in the forecast, there's another 0.25% decrease already in the forecast. More than 94% of analysts are saying that there is going to be this 0.25% decrease in interest rates. However, anything that can change this would be a pause or an increase. That would be detrimental to the market, and that's where you're going to see some big volatility. This decrease could be already baked into the price while we get there, but there's still going to be volatility, and this is good. If there is rate cuts, like if you look at it like that, there could be more injections into the economy. However, they do maybe have to start turning that printer back on and print more money. And for the stock markets and things like that, that's good because you're printing more dollars, and those dollars could come into the stock market. If you're an investor, if you're a trader, that's beneficial to you. However, for the everyday American citizen, anytime you decrease interest rates, also here in Canada, any nation for the matter, when you start decreasing interest rates, you're more than likely that you're going to start printing money. And when you start printing money, unfortunately, inflation could possibly go up unless that's not taken into consideration. So your price at the grocery stores, if you're already feeling it, those things could start to increase a little more. just every day when we're spending, your bills could start to increase as well. So, we got to understand, well, we're going through an inflationary time right now. So, if it gets worse, what else could happen? But we'll see what happens with this. And that's 2 p.m. Then you have your FOMC economic projections. These are only released at certain FOMCs. This is a really important one, the last one of the year. And then finally, we have the FOMC statement at 2 p.m. Okay. And then you guys know, after the numbers are all sorted out and released, at 2:30, then this is where Powell approaches the podium, and this is where he gives his conference, his speech. He breaks down everything here, maybe why they decided on a 0.25% decrease rate. Then he'll talk about monetary policy, talk about the labor market, talk about inflation, talk about tariffs. He'll talk about everything. And this is when it could get volatile. The markets do react whenever Powell comes to the podium and speaks. He does have that influence that he can move the markets himself. So we have to be very careful. Well, this will be a live session, but we'll be really managing our risk, lower your risk here, and trade accordingly. But because from 2 to about 3 p.m., it's going to be very volatile at this time, okay? And just a reminder, this is the last FOMC of the year. There's only 8 of these sessions on a calendar year, and this is our 8th and final one to go into 2026, okay? And maybe starting 2026, we might not see Powell anymore. There might be a new chairperson. It might be Hassett, but we'll see going forward, okay? And then we'll come back later that day for our swing positions in the Tokyo session, okay? And then Thursday this week, coming out of Europe, if you're trading early, there's quite a few folders in Switzerland on the Swiss franc. They do have their monetary policy as well, and their policy rate in Switzerland. That will be released right at the open of London. And you got a few Bank of England governors speaking, and our weekly unemployment claims are back on schedule now with the governments being opened up again. So every Thursday morning at 8:30, you're going to see this red folder of our weekly unemployment claims. So last week were good numbers. The unemployment rate went down to 191,000. In the forecast this week, they're projecting 30,000 more applying for unemployment. So what happened in 1 week to cause 30,000 more individuals to apply for unemployment benefits? That's a big number. So we'll see what the actual number is coming out here. And then finally, we have the 30-year bond auction just after 1 p.m. Eastern in the afternoon on Thursday. And then to wrap up our week on Friday, there's a little bit of European news, a lot to do with UK here, with Great Britain. Lots of low impact folders, all pre-London at 2 a.m. Eastern. Then the London market opens up. We have our European ECOFIN meetings all day. And lots of Canadian news at 8:30, low impact news, but no high impact news. And then again, when we're on a Friday, just trade careful. It is a Friday ending the week, going into the weekend, okay? So that's our news this week. Big day we have to be focused on is Wednesday afternoon, FOMC. Earnings. Not much going on in the pre-market this morning. After hours today, we have Toll Brothers, UMA, Frisia. Again, I don't think these are going to move the securities we're looking at, so I'm looking for those big names. Tuesday morning, we do have SailPoint, Campbell Soup, AutoZone, Academy Sports and Outdoors Inc. Continuing, again, looking for the big names. GameStop, if you guys are still trading this meme stock over here, GME, you guys remember this during the COVID era, took off. It's kind of lost lots of volume and interest since then, but you never know when these things can just spike at any time. So GameStop, probably we'll see what type of earnings they have. If people are still buying video games going into the holiday season and things like that. They will be reporting Wednesday before the open. This is FOMC. We got Chewy. We got Photronics, Uranium Energy Core, UEC. I have this on my watch list. I'm trading uranium. Has to do with nuclear power and things like that. So uranium is also on a watch list that I have that I'm trading, especially in this specific corporation right over here. They have their earnings this Wednesday. After hours, after FOMC now, so Wednesday after hours when the markets close, we have Oracle. This is a big name over here. They've been in the news last month over here with Larry Ellison, and Adobe Inc. is reporting also Wednesday after hours. Synopsys, Planet Labs, and a few others. Okay, and then to wrap up the week, Thursday morning, we have Siena, Manchester United, your English Premier League teams are publicly traded companies. You can invest in Manchester if you do like. And we have after hours Broadcom. Okay, so this is a big company here. This is a big company on NASDAQ, a large company on the S&P 500. Broadcom, ticker is AVGO. We have Lululemon, Costco, big retail brand over here going into Christmas time. I was in Costco on the weekend on Saturday. I could barely find any parking. It was jam-packed in there. It was unbelievable. I don't think I've seen that many human beings in one building at one time. It was packed, like more than usual. Costco is seeing a lot of traffic coming through the doors right now, going into the holiday season. And then to wrap up Thursday evening, Johnson Outdoors. It's not Johnson & Johnson, it's Johnson Outdoors, smaller company. And then Friday, nothing going on Friday as we head into the weekend, okay? So that's our earnings this week. And finally, just some news in the markets over here. We got some 4 financial moves you must make before 2026 to maximize your wealth growing opportunities. Click on that folder, read it a little bit if you like. Third consecutive surprise jobs gain quashes hopes of a near-term Bank of Canada cut. That's over here in Canada. So the jobs numbers have been looking good in Canada here. So maybe they're not going to decrease that interest rates. That's why it's paused for our meeting this week. Netflix was in the news with Warner Brothers over here. So, and also Netflix did a 10-to-1 forward stock split. So that's also, we did a blog on stock splits, why those are important too. Bitcoin is always in the news. They're in the news right now. Bitcoin set for first yearly split from stocks in decades. What else we got? This happened at the 2026 World Cup draw in Washington this weekend, where Carney, Trump, and Sheinbaum from Canada, US, and Mexico got together and they kind of drew the teams and the groups. Guys, I have tickets for June 16 in Toronto. I've got a lot of offers for those tickets right now and I'm not selling them. The demand is increasing for those and there's limited on those tickets. We won the lottery with my nephews, so I can't wait for that. That's going to be exciting, guys. It's going to be unbelievable, actually. So we have the World Cup coming to North America, which is amazing. So that's awesome. What else we got going on here? And just the FOMC. And just continuing, guys. Our Discord, we sent out a few signals on Friday. This was a long on gold. You can see kind of it was trading a little bit, choppy. Sometimes it came up above the price level, came back down in drawdown, came back up, kind of retesting in here, then finally broke out for the move. Sometimes it took a while to get it. We also had a sell on gold. And also with the indices, there was a move over here on NASDAQ where it closed below here, pushed down from 675 to about 520, 530 over here. So you can see 100, 150 plus pips. And again, if you don't do anything at these levels, unfortunately, it can come back up. And you can see it came back up. If you didn't do anything, hopefully you managed while you were in 150 plus pips profit. You took your stop loss to break even. And when it comes up, there's where your break even is. If you don't go to a break even, then the market could come back and put you back in drawdown or possibly stop you out of the trade. So that's all part of risk management. That's all part of trade management. It's also part of your job as a trader to do these things. So you're going to have to learn at some time to do these things, right? If you want, you can continue to trade without using a stop loss. You can continue to trade without managing your risk. You can continue to trade without trailing your profits, but you're going to at some point have to come up with a plan. That strategy is not going to hold up and work forever in these volatile markets. So you're going to have to consider some sort of trade management going forward, especially going into the new year, if this volatility continues to sustain, which I think it will, and probably is going to get more volatile in 2026. Okay. And this is our free Telegram channel. It's pinned at the top of YouTube for everyone. So thank you to all of our 160 plus viewers this morning. There is a free Telegram channel. I suggest you guys join it. There's promos over here. So lifetime trade idea promos, a $10,000 FXFI prop firm account, the SST Scalper Pro algo, the SST support and resistance indicator, daily bar indicator, the scanner, all of this. Okay, so there is promos, all of our live links to our live sessions. These are our free blogs available for everybody. This was one. What we're going to do every Sunday is have a Sunday stock analysis with a company, and we're going to break it down. So this one, we started this one yesterday, was NVIDIA. This is a company that hopefully everyone should be familiar with, whether you're a trader or not. This is the biggest corporation in the entire planet. It hit $5 trillion market cap. So I'm sure that we should all learn about this, because this is the one that could move the entire market. So the little blog on NVIDIA, and next week will be Apple. This is a blog on swing trading, what we're going to start to do in the Tokyo sessions this week, Monday, Tuesday, Wednesday. We're going to start to introduce what is swing trading, looking at the charts, higher time frames, top-down analysis, but we'll be focusing on higher time frames, monthly, weekly, daily, and executing on 4 hours. We won't even be coming into lower time frames on when we're focusing on swing trading. Okay. And everything is available for you guys, before and afters of all the swing trades, the ideas, setups, feedback from you guys. Also, everything that Dave is doing with the snipers in the Zoom room. Thank you guys. We appreciate you guys. We hit 90,000 subs, on our way to 100,000, hopefully in the next few months. Okay. So that's a free Telegram channel pinned at the top for you guys. And finally, our website, guys, if anything you guys want to join the team, you want to take your trading to the next level, we have lots of education available from myself and Dave, courses. There's boot camps, there's multi-webinars, over 120 webinars, which are long, 2-3 hours. And we're breaking other things down in there. And the blog, guys. Okay, so I just want to read over today's, we have multiple blogs. There's a lot of daily outlooks, market updates. This one on swing trading, okay? I'll leave up NVIDIA for you guys to read up on. But swing trading, I want you guys to understand, what is swing trading? I know we're going to focus on scalping this morning, but later in Tokyo sessions this week, we're going to be doing some swing trading. So I just want you guys thinking about this, whether you've been thinking about swing trading, maybe you haven't, but maybe you should be thinking about it. So what is swing trading? Swing trading is a style of trading that involves holding positions in financial instruments such as stocks or commodities for several days to weeks. Okay, so this is the difference now from intraday or scalping. Intraday or scalping, you get in and you're out. You don't hold positions over the night. You're just basically trading right now, and you're looking to hit your daily goal and get out. So that's the big difference. With swing trading, it's a completely different mindset, because you're holding positions overnight, you're going to sleep, those positions are still open. You might have to hold them for, like, let's say, for example, we took a swing trade today. We might hold it for all Monday, all Tuesday, all Wednesday, maybe close it out Thursday at the end of this week. So you can see you're going to go through lots of volatility, you're going to go through lots of news, you're going to go through different sessions. So you really have to have more of a longer projected outlook. You're not just looking for basic like 30 to 50 pips. You might be looking for 300 to 500. You know, you're looking for a much bigger move, but you also have to manage your stop loss. Okay, because you're not trading with basically a 30 to 50 or 100 pip stop loss, maybe, because you gotta risk more in order to hold it for multiple durations. So this is where you have to lower your risk. If you're opening your stop loss and your profit targets, and this is where you're going to have to learn how to hold trades now. So you can't just get in and trade on emotions. This is where you have to hold and see and let them develop and things like that. Okay, where you have to hold for maybe several days or weeks. In order to capitalize on expected upward and downward market swings, this approach contrasts with day trading, where positions are open and closed within the same trading day, and long-term investing, where positions might be held for months or years. Okay, benefits of swing trading for you and I, retail traders. Number one, time management. Unlike intraday trading, swing trading does not require constant monitoring of markets throughout the day. This makes it more suitable for retail traders who may have other commitments such as full-time jobs or family responsibilities. So this is where you don't have to basically babysit the charts all day, watch, be at the computer. This is where you could go on with your life. You could go on with your full-time job. You could do your family responsibilities. You could also be alerted of higher time frame setups, take the positions, and you don't have to sit there and monitor them. You can allow it to play out as long as you're managing your risk properly. Number two, reduce stress. With fewer trades and less emphasis on intraday price movements, swing trading tends to be less stressful than day trading. Retail traders can avoid the high pressure environment associated with making rapid decisions. Three, potentially higher returns. By capturing medium-term trends, swing traders can potentially achieve higher returns compared to day traders who might only capture smaller price movements. So as myself, as a scalper or day trader, I might just capture a small move, like maybe one couple candles or one small leg, whereas opposed to swing traders might capture the whole move. So there's much different and could be way more potential higher returns in swing trading as opposed to intraday trading. Finally, flexibility. Traders can incorporate both swing and intraday trading strategies into their routine, allowing them to adapt to market conditions and personal schedules. So I have a swing trading account, one dedicated swing trading, and I have my scalping intraday account, two different accounts. So, but I have the ability that if I want to swing trade, I could also swing trade, look for positions, but I know that I'm holding those. I don't have the mindset of a scalper when I'm using that account. And then I do have my intraday trading account for scalping the markets. But just like you guys, we can adapt both approaches. You don't have to do one or the other, but you certainly can do both of them. You can also do some scalping and look for swing trading while you're waiting. So we kind of want to show you guys how to do this. And then key components of swing trading, we're going to have to do technical analysis, just like we do when we're scalping the market. So you're going to have to look for the trend analysis, identifying the direction of the overall market or specific assets to align trades with the prevailing trend. We're going to look for chart patterns, using patterns like flags, triangles, heads and shoulders, double bottoms to predict potential price movements. We can use the same indicators that we use on lower time frames. So we'll employ technical indicators such as moving averages, RSI, MACD to make informed decisions. You're going to have to use some fundamental analysis as well when you're a swing trader. Earnings reports, because that could affect the way how you're holding trade going into or coming out of earnings. Understanding how earnings announcements could impact stock prices, news events, keeping an eye on news that could affect market sentiment, such as economic indicators or geopolitical events. So let's say we took a swing trade today, and we have to know that we could be holding it going into FOMC on Wednesday, and that could dictate what happens with our swing trade. It could benefit us and we make more money, or it could, affect us and hit our stop loss. So you got to know when you're taking a swing trade, also what's going on for that week, because you could be walking into volatile news. Sector trends, analyzing which sectors are performing well and why to identify opportunities. So if you see that either one sector is moving, like the commodities are moving, maybe then you want to focus on swing trading in the commodities. You maybe want to analyze which security is kind of trending, because that's what you want to find. You want to find a trend and trade it and hold it for a duration of time. Risk management, as all traders, we should be managing our risk at all levels. So you got to also, as a swing trader, you got to think about your position sizing, calculate the appropriate amount of capital to allocate to each trade to limit potential losses. Stop loss orders, setting predetermined levels at which a position will be closed to prevent significant losses. So when you're a swing trader and you're setting a stop loss, you might see that you have a much larger stop loss than normal intraday traders have. That's normal. It's you have to understand that you got to have a bigger stop loss for a bigger reward, especially if you're holding for that duration of time. So you got to have a proper R&R ratio. Controlling emotions in swing trading, plan your trades. Develop a clear trading plan that outlines entry and exit points, risk management strategies, and criteria for evaluating performance. Make sure you stay disciplined, as always, with all trading styles. Discipline is a common trait that we have to have. Stick to your trading plan and avoid impulsive decisions. So just because you're a swing trader, you still have to be patient, disciplined, allow it to come to your point of control. Look for confirmations, look for retests, just like we do as intraday and scalpers. You have to look for the same thing. If you take a swing trade on an impulse, you have to be aware that the impulse could affect you and cause you to get stopped out of the market. Then you have to ask yourself again, why did I take an impulse trade? All of those things have to be factored in, okay? Continuous learning, keep improving your skills. You're going to get stopped out of learning how to swing trade. You're going to take losses. You're going to go through the learning process. But one thing is in common, we have to continue to learn, correct your mistakes, journal. Just because you're a swing trader doesn't mean that you can't journal. You still have to do everything that every trader has to do, okay? And study the market behavior, learning from your successful trades and from understanding from your mistakes. Maintain an objective perspective. Regularly review your trading results through your journal and understand what works and what's not working, okay? And finally, incorporating both intraday and swing trading. So us as retail traders, we can diversify our approaches by combining swing trading with intraday strategies. This allows us to take advantage of short-term opportunities while still benefiting from longer-term trends, okay? In summary, swing trading offers a balanced approach between the fast pace of day trading and the slower nature of investing. Providing flexibility and potential profitability for retail traders, it emphasizes technical and fundamental analysis, discipline, risk management, and emotional control. So this is good for traders that are having difficulty controlling their emotions. Swing trading can alleviate that. It can allow you to control your emotions because if you're using proper risk management and you get into a trade, you're not sitting and staring at the charts and at every single candlestick. So you could go on with your day, and this will help control emotions and stress and anxiety and things like that. So it's all crucial components for successful trading. So our live SSD swing trading sessions this week will be Monday, today, December 8 at 6:30 p.m., tomorrow, December 9, 6:30, and then finally Wednesday, 6:30 p.m. Eastern, those 3 days, okay? And this is what we could look for. This is a chart on the 4-hour. So that's a pattern that we all recognize. This is gold at the 4-hour. That was the all-time high right there. You can see as the 4 hours came up, there's the one top at the all-time high, came back down. There is some sort of pivot here on the 4-hour candles. There's a good supporting area. There was that second leg that came up right up to that double top. So you see it didn't break out for a new all-time high. The second leg is traditionally the more powerful leg. So we could see this on the 5 minutes, but now you can see how the 4-hour candles play out. And there's your confirmed 4-hour candle that closed below that neckline. So it wasn't just like a 4-hour candle came down, got a wick and returned back up and was kind of like a fake out. This one actually physically closed with volume below, and you can see there's your confirmed candle close below. It opened. Did it come into 50% exactly or retest location? It didn't. You got to also analyze that 4-hour candle closed 99% near the low with a short wick. Next candle opened, shallow pullback. And as soon as it broke right there, that could offer your opportunity to enter into a swing short position. So if you took the sell here, maybe you placed your stop loss maybe just above point of control of this big bearish candle. Maybe some traders, give it more of a stop loss above that 4-hour candle, just like if this was a 5-minute candle. But if you're all the way up there or maybe all the way at the all-time high, you have to risk more. So that's where you got to understand your position size. And then your TP could be, again, to come down to take out this previous pivot level right there, this white line. You can see when the 4-hour candles came down, that was support. So going forward into the future, if it breaks it, that could be your target, or you could be targeting that area. So it took a while. You can see this took 3-4 days to develop, and finally it came down. But look at the pip total. That's 2,750 pips. So that could be your weekly goal. That could be exactly what you're looking for. Some trades play out like this, some don't, okay? But this is a clear example of if a double top at the all-time high, confirmed volume close below, and the extended push down. So that, in my opinion, would be a nice A+ setup on any time frame, okay? So that's what we have to look for, right? Okay, so that's a blog available, guys, right over here. And that's what we're going to be doing on our later sessions, okay? Now we're going to get started. We're not going to be swing trading right now. Now we're going to be doing a top-down analysis, and we're going to go into scalping down to the 5 minutes. So if you guys are excited for this week, I am. We've got lots going on. We're going to have our New York sessions. We're going to have our swing trading Tokyo sessions. We have FOMC on Wednesday, and we have a couple more weeks to go into the Santa Claus rally. So I just want to reiterate, a lot of people think the Santa Claus rally starts in December. Unfortunately, it doesn't. There is a specific time when it's called the Santa Claus rally. It's the couple trading days right after Christmas leading into New Year's. It's just kind of that week where there's just a couple days open. That's seen as what is known as the Santa Claus rally, okay? A lot of traders get it incorrect. They think it's the entire month of December or it's going into the new year. It's just a specific time in the markets, okay? And it's seen as a bullish time, but not always, okay? We've seen Grinch rallies as well, okay? And guys, if you're getting value out of our channel, hit the like button on YouTube, subscribe to the channel. We're almost at 90,500. Hopefully we can hit that on today's session and continue to drive and grow with your help to get to 100,000, okay? So we're going to get in gold. I know it's on the 5 minutes right now, but we're going to do top-down analysis. Good morning, everyone. Thanks, everyone, for joining. Happy Monday. Guys, sorry for the canceled session on Friday. I went to Detroit for the Dallas football game, and there was traffic at the border coming back, and there was bad weather driving back. I got back really late, and I was in no conditions to pull an all-nighter, so I apologize. But we're going strong this week, okay? Conrad, good morning. Roger, good morning. Thanks for joining. Vinny, Justin, welcome. Good morning. Danny, Kira, Dale, welcome, guys. Thanks for everyone for joining, and everyone on YouTube. Shout outs to you guys as well. No Dira Begin, welcome. Thank you for joining. Charles, good morning. Fibonacci, love the name. Welcome. Thank you for joining, guys. Welcome. Tony Gold, welcome. Thank you for joining, everyone. Okay, let's get into it. We're gonna do gold. Some of you guys might be already in a trade, but what I'm gonna do is start on the daily and start moving it down. Okay, so this is what is called as a top-down analysis. We're looking at the higher time frame, and then we're going to start bringing it down. So this is also like how you start a swing trading top-down analysis, but you'll see when we go on the Tokyo sessions, I won't be starting at the daily. I'll be starting it more on the monthly, then we go into the weekly, then we get to the daily, and then we kind of trade the 4-hour candles with our levels. So this was more for intraday trading, this top-down. I go from daily to the 4-hour, hourly, finally into the minutes. So you can go into the 1 minutes if you prefer, the 5 minutes, or the 15 minutes, whatever style fits your personality. Maybe 5 minutes is too fast. Maybe you want to slow it down to the 15 minutes, and that's totally fine, okay? Just find what works best for you, okay? So this is the all-time high again up here. Have we came up to the all-time high? Almost. It could maybe this week, next week, we could have one more push to see if we can take it out there. So let's just identify our all-time high supply zone right over here. What I'm doing is just from the all-time high, bringing it down to those bodies right there, capturing that zone and stretching it into the future. So you can see we're not too far away from continuing to see gold maybe push to all-time high. We are trending up right now in this ascending trend. So if I just look at the trend right now that's being built, you can see it's ascending, right? It's coming up like an airplane. Airplane is taking off, it's going higher, and then it gets pushed down, higher low, and it goes for a new, did it take out that higher high? Yes, it did. Now it's pulling back, so we might see another extended leg, and then we're coming right up to that all-time high zone, okay? Now let's just continue further breaking this down. One, we have like our resistance, we have a supply. Can we complement it with a good supporting area? I can see a good supporting area being held right here. Reason being, you can just look. It pivoted there one time, it came back up. And then when it came back down, the sellers had the opportunity to break it down there. Maybe this day could have taken out that wick and closed below there, and then we could have seen maybe further push down. But the second time it came there, the buyers there prevented it from breaking down, held it. That's a double bottom. And then you see the extended move. So there is good, solid support at this level. We can call it demand, support, buyers, but sellers did not break this structure right here. So you can see how it's holding. So we've got really good support just around 3,900. Okay, and it hasn't really broke down there. Will gold come back down here and retest this? Possibly, but we're diverging away from it. Okay, so now we just got to kind of see more where we're trading inside here, get some points of interest and some points of control. This bearish candle we talk a lot about on October 21. This one specifically because it kind of engulfed everything to the left. So we do have to analyze this and make some sort of observation off of this candle. So what I do is the open and closing balance. What I look for is the 50%, exactly. Cut it in half. This is a simple strategy. It's not complicated. I cut it in half, and then you can see it's resistance right there. Next push down. It came up. Look at last week, how it all traded, and it's still holding that resistance. I can also take it a little farther and find the point of control. So the point of control is just the Fibonacci ratio above the 38.2 or the 618, or if you have them reversed, like respectively, if you have the 618, 382, it will be those two numbers. And you can also configure your Fibonacci tool where it just has those. That's what I'll do, okay? But see what I'm doing? Stretching it into the future, and you can see that that leg that came up off that double bottom, that leg that traditionally has more volume, it did have more volume, but look at where it traded right into. That block prevented it from going to the all-time high, and then the sellers pushed it right back down. But you see, when it came down here, it didn't come down to this green block. That is telling me that the depth of market is getting stronger. The buyers are asking to trade up here. Sellers are bidding down here, but they're not finding any customers to transact with them. Those are what those wicks represent when they're getting rejected down there. Okay, and then you can see again, we came right back up with more volume, and then it struggled again in this red zone. And Friday, we came up there really bullish during Friday, but then near the end of the day, look at it, got rejected and turned into a bearish pin bar at the close of the market. So that's how you can see how daily candles can also switch momentum throughout the day. And finally, you can see when they close a more of a confirmed analysis. Okay, so the volume is still below this red block. So this week, if gold doesn't have buyers, asking up here, sellers could come right back in and break this trend line, and we start selling back down. Okay, so we have to figure out this pivoting level as a supporting level, because if sellers sell, we have to, respect this area. This yellow line not only is representing that body, and we have some impulses below there, but if you look to the left, it is exactly the neckline of the double bottom. So this 4,045 area is a very technical point of interest. It also cut this bearish candle right in half, and then you can see it was resistance right there, and then had 3 days where it came back down. Then finally this big blue candle closed above there, so it turns this yellow line into support. And you can see right there, Friday, November 14, the body closed right there on the 17th, right there on the 18th, and it respected it, and it respected it, and it respected it. So if we sell all the way back down, this has to definitely be a point of interest, because if this doesn't hold up, then we're coming maybe back down to this zone. If it holds up here, we might get good support holding here and try for one more leg to break through this area and see if we can break that all-time high. Okay, so do you guys understand? Before I go further, you got to understand these levels. Like, they're very critical points of interest on the daily. And this is where you could also swing trade. Like if 4-hour volume comes down to this, you could potentially look for maybe a 4-hour buy. If there's like a double bottom at this point, to take it back up, break through there, and you could be in a swing trade holding to break an all-time high. That would be a really good swing trade if it kind of creates that kind of narrative. However, if this doesn't hold up, obviously a better swing buy would be down here at this zone, because this is where the daily candles made a double bottom, right? So there could be more higher time frame traders developing or pending at this area. Okay. Also, if this doesn't hold up, we could be looking for maybe like a swing trade to break down and sell down into these levels. So that's the type of mindset you got to have, but you're looking for bigger moves, right? You're not just looking for just a small little move like we're looking on the small time frames. Okay. So looking at this big bullish candle as of Friday, November 28, if we kind of maybe start to look to where's 50% of this candle, maybe let's cut this thing in half and see how the volume is trading so far off of this. So I'm looking at 50%, which is right there. And you can literally see how we're trading off of the 50%. Okay, so you can see right there we broke down. That was a bearish day, but look at where the volume closed right up there. Wednesday last week, very bullish, came up right at that yellow line, 50%, got rejected and came down to the yellow line and closed right there. Next day, Thursday, sellers broke it down right there. That was low, but couldn't fill that wick and drop further. So it is a higher low, came back and look at where it closed right up there. Friday, very bullish day coming up here, right up here. And then they pushed it right back down and look at where we closed right at the yellow line. And then look at today, they've kind of gapped up the price. Look at how it's gapped up. Okay, we closed right here on Friday, and then look at where it opened all the way up here today. So they've gapped it up, and then it was initially bearish today where it came down, and we already have so far a low printed. That's where I placed my purple line, and you see how close it is to the opening position. It's only off by $2, 20 pips. So as soon as it opened, it was bearish, but right away those buyers stepped in and took it right back up. So strong opening, and you can see the bullish volume now filling. So we took out basically all of, Friday's open and Thursday's close. So I'm going to place a yellow line here too, because that's very important. That was where Thursday closed and where Friday opened. 4,208, and we continue to make a break above that and continue to move up into that red zone up there. But that's our highest point of the day so far. Right there, there's my purple line. Today's high is 4,219, and it's getting rejected and coming right back down. So we still have this bullish engulfed volume. Again, it's still early on the daily. This is 10 hours still left to go. So I don't know if it will hold this volume. Will it continue to fill to the high and break? So if it does, if it continues to fill and we break today's purple high, we know we're trading in this red zone up here, but it could still fill. This is an important yellow line. That's 50% of the entire zone, but you do have a daily bars that have been trading in here to start the month, Monday, December 1st and Tuesday, December 2nd. So maybe I just place a yellow cut line like right here, or point of interest line where those daily bodies closed and opened, and then it tells me 4,230. So if we continue to break above this purple line for 219 to 230 or 232, you should know just by doing the math in your head, if it's a $12 move on gold, that's about 120 pips from this purple line to fill up to that yellow line, and it could come right up there, get a wick there, and go back down. However, if it breaks this yellow line, we could definitely then possibly get right back up to 50% and maybe even break higher. There was an impulse, and there was an impulse that broke above there, and we could follow those wicks as well until we clear this entire red zone. But right now, the volume is still below this entire red zone. So sellers still have upper hand in here, but buyers are still moving up with this uptrend. So this is where the battle is right here. And it's been here all week and hasn't really moved off of this location. Okay. And then one final thing is, if the sellers control all of today and come all the way down here and flip it, that's where it turns into a shooting star. And we don't have much on Friday. Then it could break right there and start filling down to this wick. Then I'm looking at 4,175. That's a nice psychological level. And then filling down to that wick. Again, what's left is maybe just filling that next wick, and then you get down to that body and body, then that's where I would have another daily point of interest right there, okay? And then I would continue to dissect down if it was to continue to push down. So today's very important. Then when you're looking at like an overall pattern just with this leg, you've got a big strong bullish leg right there, and then it came back down. So this is kind of like where the structure is, where it's consolidating right here. It was bearish, bullish, bearish, bullish. So and here's the neckline. So if this was like a 5-minute setup, are we continuing to build blue volume to continue to break through here and maybe get that higher high? Or is it just coming in here like here or here, get another lower high, and then there's your M top, and then that's the point to break right here, your trend line and this this neckline. So if it breaks through there, you know, and then that's where we could get the sell-off, right? So this is where you're going to start to see a lot of buyers and sellers fighting it out. And altogether, this area, like right in here, it's just a consolidated area, right? Like if we were to box this in, you know, you can see bearish volume, bullish volume, bearish volume, bullish volume. Both sides are still accumulating here with long wicks to the upside and long wicks to the downside. So we'll see. FOMC could dictate the move if it just continues to build today and tomorrow, leading into FOMC on Wednesday, and that could be the day of the redistribution of the volume. Okay, so that's what we got going on the daily. From the daily, I break it down to the 4-hour. Now I want to see how the 4-hour was trading. So I know now what 4-hour leg came into here on Monday to start the week. I know which leg brought it down, what day, what times, which specific candles were the ones with the bigger volume. This is where we had this nasty just consolidation on 4-hour candles. Bearish, bullish, bearish, bullish, bearish. Came up bullish, got a wick. This was, if you're a swing trader, this is intense. Like this is... but finally, you see they redistributed back up to the upside, and then it came right back down on Friday, 10 a.m. And look at how we're trading right now, just barcoding in here, bearish, bullish, bearish, bullish. If we're looking at the bigger picture, we look at this as one leg coming up. There's one top. All of this structure is like the bottom, and then it came right back up, and they kind of pushed it down with an aggressive candle with a wick and an engulfing body. So that could be like that double top. But right there, when it was breaking down, why did this blue candle right here, Sunday to open, why was it not bearish? So remember when I told you they gapped up the market? That could be why they prevented, and they gapped up the market to prevent it from breaking down. So they gapped it up, and as it came back up, you see it's got a lower high there, and sellers are trying to push it down, but every time it pushes down, it's followed by now a bullish candle. So we're barcoding on the 4 hours. They are developing either to break here a new high and start breaking through here, test this yellow line or this yellow line, or the sellers are trying to break it down right here. So, you know, if you're a 4-hour trader, maybe you want to kind of consolidate this range as well, and you can see it's definitely just building again, coming down, going back up, coming down, going back up. So do we have a closing bar above here? No. Do we have a closing bar below here? No. Can I see which time of the day? So I can see now London, the European volume was the bearish candle. That was the bearish one. Now 6 a.m. right now, opening up pre-New York, going into Colmex and leading into Wall Street, and in closing at 10 a.m. is right now is bullish volume. So they picked it up. This is early. It just opened 45 minutes ago. This candle, this blue candle, will not close until 3 hours and 12 more minutes. So what we can do is break it down by the hourly now. Now we can see which hour was the big move. So we can see over here from Friday, 11 a.m. started the big bearish move. There's a little bear flag, the inside bar at noon, and then 1 p.m., 2 p.m., 3 p.m. There's the close of the market, 4 p.m. Here's our gap up where they gapped it up Sunday night. Then it started bullish, coming back down bearish in the futures market. Then we went back up 9 p.m., 10 p.m., 11. There's midnight. There's the star at 1 a.m., 2 a.m. This is pre-London, bearish engulfing. So there's like an evening star pattern, but it didn't really break down. 3 a.m. is London, 4 a.m., 5 a.m., and look at big 6 a.m. So this big blue volume is basically just 6 a.m. It's right now when we started the call. And this candle is going to close in 12 minutes. And then we're going to get a new hourly candle. So it's coming right back up, and we're approaching to maybe get to the highest point of the day and maybe break out. Okay, so it is building right now on the hourly. If we look at the hourly structure, it's got good support here at the purple line. We've got a higher low right here. We've got a higher low right here. So we're holding good hourly volume right now at the opening of this balance of this candle. So if I just draw a white line, good support is holding around 4203, 4200. Good support, and it's still bringing it right back up. If we look at an hourly pattern that we recognize, I can recognize one leg coming down. I recognize that leg coming right back up. I recognize a leg coming down, but didn't come all the way back down, double bottom down there or break for a new low. You can see that the buyers are coming in right at 6 a.m. and it's coming right back up. So is that a higher low leg building to break? There's the neckline at today's daily high. Are we going to get an hourly break through here? Are we going to get maybe a fake out where it comes up there and doesn't break out? All of these things, but we have to, acknowledge this area. We are coming right back up, but it could come into that second top up there. So, but this is a very big bullish candle that's going to close in 10 more minutes. So now if we follow this volume on the 5 minutes, this is what we got going on. So it started right here. Here was the big bullish move. When, look at the like clockwork, 6 a.m., look at 5:45, 5:50, 5:55, look at 6 a.m. drop, and then 6:05 brought this market right back up. So this is where sometimes like clockwork, things happen for a reason, and look at these 5-minute candles where they're getting a lot of support right here. See where there was a lot of support right there, that 5-minute bodies, and then all I have is wicks below there. So it's holding good support, and we got this nice move coming right through here. Right up to there, and now we're moving in 6:45. So are we getting now the selling leg coming down? Did we find a top? This is how far away it is from that daily high, okay? So we can also watch now the final 10 minutes to go into the close of this 6 a.m. hourly candle and see how 7 a.m. opens up. So if I just put my daily bar indicator right beside me right here, this is to let me know where we opened, had a brief drawdown, picked up the higher low, and it's been a strong daily candle that filled all the way up to the daily high. I can see when we hit the daily high was at 1:30 a.m. Eastern, and since then it came down, back up lower high, and then it kind of traded inside here, consolidated. One more leg, they pushed it down. That's where we just hit this low at exactly at 4,200, and since then came back up, and now you can see where the resistance is. We'll see this leg. Will it come all the way down to this yellow line? Will it hold right here, go back up, break through here, come back down, all of this stuff, okay? If we add like indicators now, an EMA 9, we are currently above the EMA 9. This is the exponential moving average. We are above it, this green line, and our 200 is more of our higher time frame. It's this purple line, and we're right at it. So anytime I see that the 200 and the EMA are kind of consolidating together, it could potentially cause some type of sideways trading. However, this is where we could see something where the 9 breaks above, this green line gets above the purple line. That's what's called like a golden crossover, and could signal to us that there's still more bullish momentum more to come, and we could continue to break out for a new higher high and typically get to today's daily high, maybe break it, okay? So like right here, this is where you can see this green line crossed above the 200, and you can see it had an extended bullish rally to that daily high. And then since then, you can see that the volume was trading below the purple and the green line and hasn't really got above it until just right now. But that's if you follow indicators. I don't really follow the indicators, but I can use them as confluence onto my trading, okay? So guys, I hope you guys like that analysis. Hopefully you guys learned something. Hit the likes, guys, on YouTube. Subscribe to the channel if you haven't already. The subscribe is up to you guys. If you want to change your trading for the better, hit that subscribe button. We will help you. A lot of you guys join us every single day, but you're not subscribed to the channel. We can see it in the back end analytics. So just hit that subscribe button, guys. I know it's hard. I know you don't want to. It's just like hitting a buy and sell button. That's what we should put. Instead of a subscribe button, we put a buy or sell button. We have no problem hitting buys and sells in trading, but we have a difficult time hitting the subscribe button. Am I French? No. No, no, no. Je suis no. The only thing I do French is I eat French fries. That's it. And finally, disclaimer. At Stock Sniper Trading, myself, Dave, and Ron, we are not financial advisors. Okay, so any financial consultation, please go to your financial institution, your local bank, credit union. Speak with someone who is licensed about if you're looking to make investments or things like that. We're here for entertainment, education. We trade like you. We can lose money on any given day, but we manage our risk. Everything you do is at your own risk, okay? Just like if I watch any channels of streamers and they're trading, I understand. I'm following them. They're there for entertainment and education as well. I have to manage my risk if I follow a trade that they are doing. And if I lose, I don't blame them. Things happen. I'm a trader. I understand these things. Maybe if you're new to trading, you don't understand that traders do take losses. And that's why it's maybe you've never seen that before. But the more you trade, you're going to see that you're going to take losses as well. We're not immune to it. Doesn't matter how much years you have. You could be trading for 40 years. You're still going to take a loss here and there. That's how it works. But you have to be mature about this. You have to understand it happens. Okay, it's not, just because someone is live streaming their trading doesn't mean that they're going to just hit trades all day, every day. If we were losing constantly, I don't think we would be growing a channel and having support from people if we were losing on a daily basis. I know I certainly wouldn't be following a channel if I was tuning in every day and they're constantly losing every single day. It's going to raise alarm bells. But we have a good track record here. We didn't just start a couple months ago. It's been 6 years of doing this every single day. Every day live trading. So it's, we can't hide anything. But I know some of you guys that have been here for a while, you guys are going to continue to learn, okay? I'm speaking to the new traders. Just take it easy on your journey. You don't have to learn everything in one day. It might take you a year. It might take you longer, but just take your time. You want to retain information, what the market is giving you. The market is slow. Vinny, if the market is slow, it's slow, okay? We can't make the market go faster. The market has its own mind, and we have to let it trade the way how it wants to trade. If you see it's trading slow, then you got to trade slow, or you got to choose another time to come back in the markets. This is where, a lot of traders go through this phase where all they do now is just start forcing trades when they know it's moving slow. So this is where you got to be mature and learn, okay, the market is moving slow, so there's nothing I can do. That's it. That's trading in a nutshell. This is why a lot of traders don't understand this type of reaction to the markets. Markets move fast. Sometimes they move slow. Sometimes they look at, how do we trade this? If we were trading this, what do we do with all of this? From this time, from 3:30, right after London opened up until 5:30, that's 2 hours right there, 2 hours of our day. If we were just watching this go up, come back down, go up, come back down, go up, go down, go up, go down. This would be driving me crazy. And it looks like we're getting that type of volume again. We're just going down, coming up, going down, might go back up. But I'm watching now for maybe where's the neckline? Will it be a double top? Will it just consolidate and break through here? And then we're coming up to the daily high. Is something going to happen at the daily high? All of these things. Okay, so you see how now we're kind of coming back down. Will there be some sort of reaction at this yellow line? Because I know the yellow line on my chart now is a daily point of interest. Okay. And see this big bullish candle that kind of closed above that yellow line? Maybe I should analyze something on this bullish candle. Maybe the open close. Maybe I figure out the point of control of that candle, which is just right below that yellow line. Okay, so here it comes down. And again, if you were a buyer and you didn't do anything, look at right at the bottom of that red zone. There was sellers there, and coming right back down. That's a nice leg that like extended from up here to there. That was 60 pips. And again, if you don't do anything, look at how it can come all the way right back down and you could give away your 50, 60 pips. It happens to me a lot on these calls too. So, you got to understand, we're not like, I'm not swing trading. Okay. So, like we're going to do swing trading later in the Tokyo session, but we won't be on 5-minute candles. So this could be like another analogy of a swing trade. What if these were 4-hour candles that closed above and you had a 4-hour candle, 4-hour candle, another 4 that reached like a weekly red level and you were up 600 pips instead of 60 and you don't do anything, then these could be 4-hour candles now that are coming down and then you just gave away 600 pips, your entire swing trade to the market. So you got to have that same type of mentality, okay? And then you see how this big black candle closed? Can I cut this guy in half? If I do, it's right there. It's right at that 200 EMA and the 9 EMA again, okay? So now we see, is it going to build some support here to come back up and start this next leg, or are the sellers going to push it through here and extend it even lower through here? Is anyone in a trade right now? And then this is where the volume could momentarily consolidate right above that yellow line and right below 50% of that black candle that just closed, like right in here. And then this also goes to, if you want to buy and you didn't want to buy these highs up here, here's your discounted buy at a daily point of interest, and you get it at a 60 pip discount from these buyers up here. So whenever you're looking to patiently wait for a trade, you can patiently wait. There's nothing wrong with that. If you just bought this candle like right now, it's a beautiful candle. Could be even a pip and dip candle. It's like 35 pips right now, just being built right back up. If you're not in, this candle is closing in 3 minutes. Where will it close? Will it close engulfed up here and have another leg to continue? Will the sellers now push it back down? I don't know. I'm going to wait for this bar to close because it just opened 7 a.m. So you can see, guys, how these markets move. 645, 650, 655, right down to that daily point of interest. New hourly candle switches momentum. At 7 a.m., it was started with a nice big bullish push. Who's excited for FOMC this week? Wednesday, 2 p.m. The last FOMC of the entire year, and we might not even see Powell in 2026. Might be a new chairperson. Lots of news over the weekend too. Did anyone see the news between Canada and United States with Carney and Donald Trump? I think Trump was kind of shocked by the pivot Canada made from the U.S. and it could have some domino effect in around the world. Trump likes to use leverage on different countries and apply those tariffs and kind of bully his way. over here, Carney, who's the prime minister here in Canada, if you guys saw it, he kind of didn't give in to Trump. You know, he kind of just pivoted away from it. Said, we've already found some new business partners, trading partners around the world. We're not relying too much on United States. We want to try and not be, you know, they dictate what are the rules of the game. So Canada has showed, you know, they're moving away from the US. And other countries are looking at that because maybe other countries didn't have the ability to do that. So there is pros and cons of that as well. Obviously, it affects Canada too. Canada has lost a lot of jobs in the last couple months, but you know, he's looking for maybe a longer term outlook to, you know, look at other trading partners, not just to rely solely on USA to dictate everything. So that's developing, guys. You know, I live here in Canada and my neighbor is the USA. So I'm affected by both of these guys making these moves. And it affects our overall economies here, and especially with trading as well. So, you know, that's developing. I'm watching that as well really closely, what's going on with that. Okay, so there's the bar that closed. Blue, strong blue candle. Okay, so it could come back down into here, or it could just build up here, and then we look for another continuous leg. So if we're looking to buy again, we could be looking to buy down in here, unless you want to buy up here. Leverage has worked for years and years and years. It's when you have that upper hand. But guys, if you are studying what's happening in Venezuela, that's another, that shows you again, like in real time, what's going on. US alienated Venezuela years back, where said, if you're trading oil, you have to use petrodollar, right? And Venezuela said, we're not transacting in petrodollar anymore. We're moving away from it. So US kind of cut them off, but Venezuela made trade with China, exporting a lot of oil to China and getting paid in yuan, the Chinese yuan. They were also accepting crypto in Tether. And then over the years, countries saw, even with crude oil, that you don't have to trade with America. There's other trading partners around the world, and Venezuela was doing okay on their own. And then that's when now they're coming, forcing them. You know, I don't think it's all for just drug. They're bombing the boats in the sea there just for drugs. I think they have another agenda there. It's about the crude oil, and to bully them. And that's the way how the world is working right now. There's always something going on, right? And if you guys remember also, in 1974 was a 50-year agreement with the petrodollar for oil. And 2024 of August, Mohammed bin Salman, the crown prince of Saudi, I believe Saudi crown prince there, he ripped up that 50-year lease agreement and no longer is trading with petrodollar as well in the Middle East. So, you know, you can see that was a 50-year project, and 50 years later, you can see how countries are starting to trade with other countries around the world. And it's affecting empires, superpowers, things like that. So, unfortunately, guys, these are the geopolitics in trading as well. So it's not always just about candlesticks, price action, and like indicators. Trading is also, you got to know what's going on around the world. And it's kind of like a hypocrisy. Like US was always saying Venezuela has bad crude oil. It's like tar. And now they're knocking on the door, potentially trying to now come up with some sort of agreement, trade deal, and trade with them. Problem being is, in a lot of people say, like Trump is saying, drill baby drill in Texas. Texas is sweet crude oil. In Venezuela, it's more of a sour. It's different, right? And they don't have the infrastructure right now to refine that type of oil. And sweet crude is not in demand right now. There's other type of oil in demand. So if you're a crude oil trader, these are things that you should be, like looking at, okay? Should be watching these things because crude oil is at some good levels as well for either buying or has further movement down, depending on supply and demand around the world. Okay, so now we found some consolidation above here. Okay, but there's bigger volume now based in these candles. Okay, so these are bigger candles. You had that bearish candle came down, bullish candle. So, we're just trading right above here. Okay, looks like it's still kind of holding up inside here. Okay, I'm gonna buy in here and I'm gonna see if we can buy our way, kind of buy, fill up all of this, maybe get a new break above this wick and test maybe 50% into this red box and see if it can come up to that close to that daily high. If it breaks up here, we'll see if we can get that daily high. So I'm going to go in a buy. Reason being, it did pull back. It's holding above kind of 50% here and kind of just consolidating up here. So I'm looking to see if the buyers can ask to continue to trade up here and see if we can get that next leg up to continue to break here. I'm going to place my stop loss just below this green zone, below this candle, like right over here. So that's where I'm going to place kind of my stop and then see if we can continue to maybe drive somewhat close to the high of the day, okay? So I kind of want to see if this trend will continue to keep up. Where it moved up, it pulled back to see if we can get that continuation to fill up here. If it has to come back down, I'll be in drawdown, but I want to see if the daily point of interest can hold like a double bottom there without getting stopped out and see if it will build that next leg. However, that's maximum risk I'm giving this. Below this candle, because if this can't hold up, then everything could break down and then it could come and target the opening balance of the candle. So I want to see if this daily candle can continue to hold this momentum and see if we can come somewhere near the highest point of the day and kind of fill this imbalance. One target like up here is, you see these 5-minute bodies? There was a wick there, a wick there, a wick there, bodies, and then that other big bullish candle that came right through there, right when the London market opened up at 320 and they wicked it down. So also got to watch this level right in here at 4216, okay? If it gets up there. I'm in a buy. I'm testing out a buy here on gold. Yeah, we'll be streaming throughout December. Obviously, we'll be not streaming on, the days where US banks are closed, like Christmas, Boxing Day, and New Year's Day. But all other days, the Santa Claus rally will be here with you guys. So you're welcome to join us. But make sure you guys hit that subscribe button and the notifications too, because sometimes I might come on unannounced, and I just want you guys to have that notification so that you guys can come on and join us. Okay, so we got a good bullish candle building, but it's got wick, wick, wick. Can we fill these wicks? We're trading into about 50% of that big bearish candle right there. That's where it got that wick, that wick, that wick.
So I know it's going to be a lot of cut lines here, but I want you guys to understand what I'm talking about. So 50% there was a wick there, a wick there, and a wick there. Now we're filling it right back up. There we go, right up to it. Can we push for a new high and possibly close above this red line? Because we can make that support going forward. This candle's closing in 70 seconds, so it's almost at close. If you're a small scalper, that's 15 pips with zero drawdown, but we're looking for, to fill up would be about 30, and then ultimately to get up to that red line would be about 50 up there. Okay, and we got a watch going into the close. And remember, if we can't produce a new high, this candle has failed to do its job, then it got rejected, and the next bar could open black and come back down. So now it's pushing one more time right into the close. It didn't officially get that higher high. And then you see how this candle just opened bearish. So it could come all the way back down. Remember, it's a bearish ignited open. So it was a strong selling open. Could come down, but it got a quick wick so far. So we don't have too much wicks here. We just fill a little bit, and maybe we could break that and come right up to 42.14, right up to there. But it is black and it is holding, so it could still come all the way black all the way down. If buyers quickly can't ask to trade right up here right now and produce this new high, this is when we want it. Right now, we're there. So we just got to get those buying orders asking to trade up here and just advance right through here. Otherwise, sellers will come in, notice that the buyers are weak, and then they'll start offering and drop it right back down. And in a barcoding situation where it's black, blue, it wouldn't surprise me if another black candle comes down here, if the buyers are not here. So it's been holding for over a minute. We're also above that now. There's that kind of crossover where the 9 EMA crossed over to 200, but I'm not really concerned about that, especially when they're trading real, like they're just on top of each other. That's where you get this consolidation. But this could be the start of a bullish crossover if it continues to build. This is when we should see a redistribution and just coming through here. But if it's not there, then we have another leg coming down. I think a lot of traders are taking Monday off today. Not a lot of traders in the markets. Everyone's tired from the weekend. Okay, so you see how the buyers were not asking up there. That's why I told you, I'm not surprised to see if a black candle comes all the way back down. So let that be a lesson. If you're in a buy or sell and right away there's small wicks and you don't get that move right away, you're just stalling. And then there's going to be more offers coming into the market, and it's easily to push it down. So when the market comes down now, we got to see, did we produce a higher low? Is it getting pending orders down here? Is it still holding up the structure? Is it still building? Are we now going to consolidate in this quadrant now from this red line to here? This is where it looks like it could be building right now inside here. You have that black candle, blue candle came in, that black volume, blue candle, black volume, still building in here. This could come all the way tumbling right back down. Okay, now we're consolidating right in this range in here. And still caught up in this barcoding. How's the mic sound today? I hooked up a different mic. I was just wondering, does it sound better? Especially YouTube. YouTube was having the issues with the other mic. Is it a little bit better today? Good? Okay. Okay, and this candle is going to close in 1 minute as well. So gold is in a consolidated range. You know, we got buyers buying, sellers are selling. Buyers are buying, sellers are selling. It's accumulating both ways, so we're going to have a two-way move. So if sellers accumulate more up here, they're going to start dropping it down into here. I'm in a trade. Yes, I'm in a buy. It's currently experienced a little bit of drawdown here. And this is a big bearish candle, so it completely engulfed and closed back below this zone. So in order to build back up, I have to respect 50% of that candle, and it's right at my entry. So even if it comes back up blue and gets a wick at my entry, now the volume is below that 9 and that 200 EMA, you know, and then it could push all the way back down into, see this daily point of interest where it all started here at the yellow line and that box. So if the buyers aren't stepping in right now, you know, it could come in, get rejected, and continue with that leg coming down. Okay, so this candle opened bullish ignited. It's a strong opening candle for the first minute, but now it's fighting against a lot of bearish volume against it. So it's struggling. It hasn't even came up to attack 50% yet. So it's got a lower high, and now the sellers are there offering and continue to push this down. Next bar has no wick. There's the flip, and it could push all the way back down, coming down into this daily point of interest. And that's where, you know, I gave kind of the benefit of doubt. If it's going to get a bottom, it definitely down there would be the second bottom on these 5 minutes, still be above 50% of this 625 candle and develop at this daily point of interest as opposed to just this no man's land right here. But they're going to produce a higher low. They better come in. Otherwise, sellers will sell this right back down. Sell signal at 42.10, Lee. $42.10 to 15. Okay. Okay, if it can't get a little higher, then I'll close this trade out. I'll realize this drawdown and I'll get out of it. Okay, I'm gonna close this because it is counter trading a signal. So I'm gonna get out of this right now. So I'm gonna close this. I'm gonna realize this drawdown right here. So I'm gonna lose 8 pips, but I'm gonna get out, okay? And then just recalibrate, and it's not even the greatest volume to be trading in here anyways. So I'll wait for something maybe to develop down in here, or maybe look to continue to sell this down, but I'm out of it, okay? So I don't like being in an opposite direction if there's a signal or something like that. So, and plus I don't like this volume anyway. So better take an 8 pip loss than losing where the stop loss is. So guys, I manually stopped myself out. I manually took myself out of the trade. I know it seems crazy to some of you guys because some of you guys don't manually take yourself out of trades. That's fine. That's okay. You can still be in, you can come out, you can do what you want. I'm telling you that I came out of this trade. The volume is not the greatest anyways. even for buying or selling. So I'm just going to continue to wait it out. Okay, so while we're waiting for gold inside here, I'm going to also do an analysis on US30, get this out of the way. Top down on US30. So then all we have left is NASDAQ for later on. Okay, so US30 on the daily as well. Okay, so let's just do an analysis here. We're almost at the all-time high again on US30. There's the all-time high. This 48,450 area. So if we kind of bring it down right here, you know, to those bodies, we're trading right back into, look at right in here. That was that previous all-time high right there, drop down. So there's like the obvious pivoting point right there where the market held strong, 45,760. Okay, and then you can see which bodies right below that yellow line held up the market right there. So this is where you can have your red and green zones on the higher time frames on Dow Jones. We also have a pivot right here where it came down and stopped right there. So finding just your obvious pivots in the market, right there was an obvious pivot. There's where it broke down, continued drop down. Here's where it came back up. Tuesday, November 25, closed above, and we're continuing to push up. So it is pushing up rather nicely. Okay, and could be transacting in here this week, could break for a new all-time high, or it could scale back down to 47,000. But right now, if we just base what's going on, big candle on Wednesday of last week. So let's just figure the open and closing price, figure out, cut it in half. There's a nice 50%. Then I can see how it was previous resistance right there. Then with the volume above, it turned into support, okay? So if we're just looking at a nice supporting point of control from Wednesday of last week, right there. Then I can see on Thursday, we traded right into it. Friday, we came in, higher lows out of here, and we could continue to build. If today has a strong build, we could build and fill up Friday's wick and continue to trade near all-time high. Or if sellers are here, they might start rejecting. Here's a lower high. Friday was lower high, and all of these rejections could push us right back down and transact right into here. So if we kind of follow the Friday's volume, we kind of opened right here. Friday, open, came down, made a low of the day, came right back up to the opening price, pushed out. So that's a high on Friday, right into that all-time high supply, and then it got rejected and closed right here. So if we look at today's opening and closing price, there was the closing. They gapped it down just a tiny bit today. So there's our opening price. It came down. It was bearish, bearish, bearish. We made a low of the day already, transacted into Friday's 50% right here. Okay, so there's our low of the day. It came right into that little pocket right there and continuing to push right back up to the opening price. It flipped bullish and then we filled. We got a high of the day. So it's a bullish pin bar. And now it's getting rejected right there at 47,985. So if it continues to fill to today's high, we could break and fill all the way up to Friday's high. But also we have to acknowledge Thursday's high as well, right up here. So one more point of interest right there. And also know this is how far away we are from the all-time high right there. So if it continues to build, maybe we'll get ourselves up there. But if it continues to get rejected, come back down, sellers could fill the bottom wick and continue to trade down to Friday's open, maybe possibly back down into this green zone, okay? Not a lot of volume on today's daily candle so far. So we can go into the 4-hour, start to look. Yeah, there's no 4-hour volume in the market. It's just died off. Like these are the 4-hour candles. This was where we opened, was indecision from 10 to 2, from 10 to 2 here, nothing going on. Here is 2 to 6 a.m. This was all of Europe, came down, back up, closed, and this is the 6 a.m. candle. So even the 4-hour candles are not looking good on US30 right now. No volume. Wow, even look at when you break it down to the hourly, nothing is going on. Okay, it just came up, down, up, down, up, down, up, down. So these are horrible. Maybe we got to let this continue to develop and then we can follow it going into Wall Street. But not much going on US30. Oh man, yeah. This is how it looks on the 5 minutes, okay? So we'll just see that it is creating a little bit of 5-minute support right here. There was like second bottom came up, but it's not breaking out, just trading inside here. It's not the greatest of volume, okay? So we'll just continue to keep our eyes on this as it continues to possibly build leading into Wall Street, okay? So we got US30 out of the way. We'll do NASDAQ in a little bit, but let's just go back to gold. Again, gold is doing nothing, okay? Basically, the markets, like when I look at US30, doing nothing, and then I look at gold, it's doing nothing as well. So this is very choppy. So this is where we have to just sit on the sidelines, or if you're trading, buying or selling, you just reduce your risk in volume like this. Otherwise, it's just like a yo-yo, just going down, up, down, up, down. No news today, nothing going on. Italian bank holidays, nothing, guys, not much. We don't have any earnings today, nothing to talk about. Just some real choppy volume. You know, like days like this, I know we're trading live here in front of an audience, but if I was trading by myself like this and I woke up early and I saw the volume like this, maybe it's just one of those days. Just walk away from the computer, come back in a couple hours. There might be better volume trading after 10 a.m. instead of just watching, like, I'd rather watch paint dry than watch this. Because trading this stuff could also frustrate you. And then could cause damage to your account. When you get frustrated taking trades, you might take more trades. You might get mad. You might not get the outcome you're looking for. You might start increasing your position sizes, and before you know it, you've created disaster for yourself, where you didn't even have to trade this type of volume. So, but over time, you'll learn what's good volume, what's volume to stay away from. Over time, with just experience, you'll see it. Just like how I learned. No one taught me to, I was always trading this stuff, but I learned over time that it was just too frustrating. So it's better just walk away and come back at another time. I know it sucks on a stream. We can't really just walk away and wrap up the call and come back, but sometimes we have good volume we're trading. Sometimes it's like this, but it's good for learning. And if you want to engage in this, you're welcome to. So we can see it didn't really break down there. It's coming right back up. But again, if you were to box this, like this area in from like this red line to right here, it's not giving like big moves. Sellers never really broke it back down here. So it is still building back up. So it could maybe advance out of here. However, just got to wait it out till maybe 8 a.m. and COMEX at 8:20. Okay, but lots of resistance up here. We have the sell signal. So it was kind of initiated at anywhere from 415, 14, 13, 12 in here. But we're in this consolidated phase. Okay, so close with a bearish candle. Next one opened ignited here. Just bouncing around. Again, you see those EMAs. They're just like kind of just parallel with each other, on top of each other. Again, when I always say that, it could be a time where volume is kind of consolidating, and you can clearly see how it's consolidating when these EMAs 9 and 200 meet. And we're still trading sideways here. Really boring volume. Did anybody do anything exciting over the weekend? Oh, Alex, nice. You played in a poker tournament? Whereabouts? Mike, you're going to Colombia. Nice. Very nice. Austria finished 4th. Amazing. How many players, Alex, were in the tournament? Boom, you became a granddad. Congratulations. That's exciting. Man, I can't wait to become a granddad. That's awesome. Congrats. $200. Nice one, Alex. Good job. YouTube, you guys do anything exciting? Trev, grandkids to see Santa? Zetaf, you saw your family, the most exciting thing always. 1 year without seeing them. Yep, family is everything. That's good. Make sure you visit your family as often as you guys can. Lavish, you became a dad yourself. Congratulations. That's awesome, guys. Good. To all the granddads, dads out there, uncles, everybody. Congratulations. Mo, welcome. Good morning. Frank, grandfathers always take care of their children more than their grandchildren more than their children. Yeah, I know. I see that. My dad, you should see when he sees the grandkids. My son and daughter. My parents, they go crazy for them. They barely even know I'm in the room when they see me. They just go straight to the kids. I'm like, I'm here. You guys know I'm here? But I understand. It's nice for them. Oh, Timmy, you took the kids out for bowling food, close to $300. Oh, I know. I know how that is. We went to the movies the other day. I told you guys it was $175 at the movies. Anywhere you go out now, you got to be prepared to spend 100, 200, 300 bucks. Doesn't matter where you're going. If it's a restaurant, if it's bowling, movie theater, that's the power of losing purchasing power on your currency and also inflation. Everything goes up, but our wages are not going up. Cost of living keeps going up, and our wages can't keep up with that. Lead, buy Netflix stock. People will need to stay at home more. Yeah, and they just did the 10-for-1 stock split. Reason being is they issue more shares on the market because they could see more investors purchasing, making it more of an attractive price. And also they just acquired Warner Brothers as well. So, if Netflix is, if you follow it, if you watch it, the P. Diddy series is on Netflix. Okay, so it did close above there and big bearish candle coming right back down. But it could just come back down and regain another higher low and continue to build up. So let's see, we're trading right back in this zone again. Let's see if this bearish candle can actually come down, maybe engulf, start a leg coming down. But every time it comes down, we've got higher low, higher low, higher low. So it is still technically building up here. Maybe we'll see if something happens more above here in the red zone. $0.50 ain't playing. There was some things in that series. I haven't watched it all, but there was one episode in it I didn't know. Like, I know everything with Biggie and Tupac and things like that, but I had no idea that Biggie paid for his own funeral. All over all of these years, you thought, Puff Daddy and the family, they paid for it, but man, that's as ruthless as you can be. If that's true in the movie, I'm quoting the movie. Don't quote me. I don't know anything about this shit. I'm just watching the movie, the documentary. Yeah, guys, this is not good volume, okay? Like you can go in, trade it, you can be in buys, you can test out sells, you can engage in this. Still building. I'm gonna stay away from this. Maybe as we approach 8 a.m., maybe something near COMEX, maybe we'll see something develop. Maybe, maybe at least we'll see maybe something bearish coming down here, and then maybe have that extended leg to go down. Right now, it's just kind of just building in here, not doing much. US30 is even worse. Yeah. NASDAQ looks decent, but we'll do a top-down analysis soon on NASDAQ. It's another Monday morning, guys. Just understand that this is typical, maybe how Monday volume moves. We have no news today. Okay, there's no news. We have no earnings in the pre-market. It's the first day of the week, coming off of a weekend, and we do have FOMC on Wednesday at 2 p.m. So markets can trade like this. Securities can trade like this. But this is where you're going to be tested to see your discipline. And there's nothing wrong with sitting out. Like I was in that trade and I manually exited it myself, just because how the volume is trading. Now that was a big bearish candle that came down, and then again, it's got that higher low push back up here. So it could continue to extend out of here. And maybe we'll see something more develop, up here. But again, those sellers just jumped right back in and pushing it right back down. So like buyers are getting frustrated. I'm sure sellers are getting frustrated. So if you're on the sidelines, you're just getting frustrated of watching this, but you're not emotionally involved. You're not financially involved in it. Okay. So it makes watching it that much easier. Lee, I couldn't have said that better than myself. You're absolutely correct. That's how trading works. Trading, you have moments of great excitement and then hours of boredom. Yes, and that's on all time frames. Even a scalper intraday trader, it gets exciting too, and then it gets boring real quick. If this was swing trading, imagine this, like these are 4-hour candles and you're waiting. This could be 1 day of trading, 2 days, 3 days of trading, and it hasn't moved anywhere. And you're still waiting for that swing trade. And then you could be Monday, Tuesday, Wednesday, and now it's approaching Thursday, Friday, and you still haven't even entered into a swing trade. So there could be weeks where you don't even get to take a swing trade, right? But that doesn't mean that just because Monday, Tuesday, Wednesday have passed, you're not in a swing trade, means that you got to force now a trade on Thursday and Friday just to say that you're trading or to say you made a trade that week. You still got to understand that there might not be a setup, okay? So right now, like they've really rejected it up there. Now they're bringing it back down. So now sellers look like they got the upper hand. There is a sell signal, SST. So I'm going to go in with the selling momentum. I see it kind of closed above there, but there was no, big move by the buyers to advance it out of here. So I'm going to see if we can sell back down to the yellow line, break it, maybe get down in there, and maybe test that red line at the opening bodies. Now I'm in a sell. I just entered on here to see if we can redistribute or maybe close down in here, maybe going into 8 a.m. And then stop loss. If I want, I could leave it right up above that wick, but that's pretty tight because if it comes back and just breaks out of there, I could get stopped out. Then they really pushes down. So I'm just going to advance my stop just above that red line up there because that red line used to be a high up there. That's where it came in and went back down. It came in that big blue candle right there outside of London at 320. They rejected it, and that started that big, deep next 10 minutes coming back down. So my stop loss is right above that London move. If it starts coming down here, I'll start to reduce my stop loss. Okay. Definitely want to see now if sellers have the control to continue to push this thing down. And I know taking the trade a little bit early as well, it could just come right back in this consolidated zone, come down, go back up, go down, go back up. But maybe with this, that strong move by the buyers, and then it came down, closed as a hanging man, and now they're pushing it down. Maybe the sellers have absorbed enough to really kind of maybe get it down here and close it below here, and then get that leg pushing down going into 8 a.m. I could be entirely wrong. Just trying to go with the flow of the market here and see if this selling area can keep up, hold up. If it keeps building, again, I might manually exit this trade again before it materializes up here, but kind of want to see what will happen here. So those sellers brought it down. Buyers are still here, bringing it right back up. 2 more minutes to go. And if there's going to be a second top, this is where it should develop up here. Second top meaning this is the first top right there. This is the overall neckline down in here. This could also be like a neckline here, but where it came down, coming back up, if this is like the second top area, then should see price coming back down, maybe physically filling those wicks, closing below there, coming maybe retesting this, again, trading, consolidating in here, then hopefully breaking this, and then to continue to push down. But we're still stuck in this flagging area. with tough trading volume where buyers and sellers are both occupying this area. So we'll see who can push out of this. It's not moving much. No, it's not. It's not the great. No, we've stated that the entire call. It's not good volume. But if you get in a trade, just reduce your risk. Don't risk too much until we start to see the overall flow of the volume. And this candle's closing in 15 seconds. Okay, so it didn't close black below those wicks, closed black, but next candle opened bullish ignited. So you guys know those are strong opening candles, opening bullish, coming right back up. They've rejected it, so can it continue to hold this bullish open? You know, if you're on buy side, it's refueling itself as well. While it came down, it refueled itself, so it should continue to punch out, maybe fill this wick. If the sellers are still there, they will reject this volume back down. And then again, we got to test to see if it will hold that opening balance. It's still holding it. So it's been 30 seconds of holding it. Will it continue to maintain it? Will it continue to come right through here? We are 9 minutes away from going into 8 a.m., a new hourly candle. If you look at briefly at the hourly, we had that push down from 2 a.m. London came up there and pushed down. That was that 320 wick. Then it pushed down. Now it could be coming back up. So if we get a good return to the downside on this hour, maybe going into 8 a.m. and COMEX could have that signal, that next leg down, but it is still looking bullish on the hourly. And this is this 5-minute trend we got going on right now. And I switched my bias as well. I was in a buy, closed it out, and took the sell. But that's the way trading goes. Sometimes you get mixed up with signals and things like that. It's the nature of the game. I'll let you guys know as soon as I get tapped out up here. I'll verbally let you guys know. This could be two coming to grab pending orders going into 8 a.m. So keep an eye on that as well, whether you're buying or selling. This could affect both directions. Because it looks like they can clear the board up there, take pending orders, hit stop losses, take out all of liquidity up there, and could potentially reverse the move down or hold strong. And then going into 8 a.m., it's another bullish move, breaking through and testing today's high of the day. So this could be one of those setups where it's breaking above this high. If the sellers can push it back down and close it below there, then it could come back down black. But if this closes blue above there, it could make this resistance area support and continue to support that move, hold this move up and break through there. Then definitely I will be getting stopped out of this trade. I'm in a sell, not in a buy. Now we've got 90 seconds going to close. There is a little bit of a rejection on that big wick. Okay, but remember, it's still holding that big bullish opening body. Now, where will this volume close? So 60 more seconds to go into the close. And then we just got to fight off one more 5-minute candle, and then we go into 8 a.m. And that's where markets will open up. 8 a.m. is a new hour. It's the hour that represents COMEX market open at 8:20. Traditionally, there's news at 8:30. So it's a very, very, very important hourly candle. So that's a nice rejection. That's a beautiful rejection. Unfortunately, it encountered drawdown, but drawdown is only realized when you close a trade. It sucks seeing yourself in drawdown, but I got to follow how this candle closes because it's still a big inverted hammer and it still has its ignited open holding its body. So even sellers are pushing it down, could hold that, buyers could refuel it right back up. It could open with another bullish candle and just fill that wick and drive through here. So, it's a nice watching it get rejected, but I don't get excited until the final bar closes. And you still see it still closed with strong volume above this level. So it is still technically bullish. Yes, it does have a rather large wick above it because now you can see volatility is increasing. There's bigger movements now as we're leading into 8 a.m. But it's not a short wick. Like these are short wicks. That's a rather longer wick. So it takes more effort now for buyers to continue to ask and trade up here to continuously fill that wick and create a new higher high. So even if it is bullish and it comes through here, offers could be pending in this location and continue to take that down with lower highs. So right now we have a black candle being produced. Can it come all the way down? We're testing now 50% of that previous strong bullish candle. Can we break it? Can we come back down? Can we engulf it? Can we close strong bearish going into the next hour? Then maybe that was the liquidity grab that I was talking about. That's a very important, analysis type of candle. So we got to follow to go back into the close of this candle. It looks like there's buyers and sellers. They're both here. They've been here this entire call, but sellers really haven't convincingly closed it below any structure. They keep pushing it down, but then the buyers keep bringing it back up. So you got to have a bearish candle that can close below where I entered down in here. That would close below structure. We got to close maybe below this consolidated zone. They haven't achieved that. But they keep selling the highs, but they're not really closing it with conviction at the bottom. And that's what's allowing buyers to continuously buy it back up and produce all of these higher lows and still hold up this uptrend on the 5 minutes. But at 8 a.m., things are really going to open up in the next 3 minutes. So let's see what type of close we get here. We have a nice rejection. So they did hit some pending orders up there. Lots of stop losses got activated. I told you I placed my stop above that London high wick right up there. And I escaped that. Now I'm kind of almost right back, almost to break even, but that's not what I'm looking to take a trade. We got to kind of see if it can close strong down in here. So maybe we can carry forward some bearish momentum going into 8 a.m. See, that's demoralizing. When it comes down like that, it was engulfing that candle, spike there, big order, bringing it right back up. It could flip this candle, close strong. Then 8 a.m. turns out to be bullish momentum to continue to contest up here. So the close dictates everything. And we have 2 more minutes to go. Today's all about the 1 minute time frame. Yeah. Sometimes 1 minute candles move nicer than the 5 minute time frames. They might make your decision easier because you might be in a trade for just a couple minutes. But 1 minute candles come with risk as well. Trump news right now. There's a Trump set to unveil a $12 billion aid for farmers hit by trade war. So that could be released today or have an announcement today. You can't trade the 1 minutes. You can trade any time frame you want as long as you set your mind towards it. Anyone can trade 1 minute candles. Anyone can trade any time frame. You just got to set your mindset towards that time frame and know what expectations are. That's it. And you can trade it. Okay, so you see how this candle has now flipped momentum? It opened, it was bearish, bearish, bearish. It was engulfing, big black candle coming all the way down here, but it's testing this supporting level, and the buyers are still here supporting this move, and the candle came right back up and flipped as a bullish pin bar hammer candle. So the momentum has entirely flipped going into the close, where buyers are buying this. And here's the close in 5 seconds, and we're also moving into 8 a.m., so a new hour. So it could continue with this momentum. There's the bullish ignited open off of that bullish hammer and continuing to trade up into this zone. So again, if it fills this wick, my stop loss is just above there. And then I get stopped out, preventing myself from breaking this daily high and continuing to drive. Unless the sellers are here, which they are showing, they're still here. But again, it's one of these shooting star candles that pushes down and it's just being propped right back up. But this could be now 8 a.m. So this is coming now, not just like a 5-minute candle. This is coming down with the momentum of 8 a.m. So it could push again down here, but let's not get excited because it could just come right back down and go right back up with another wick. So this is a nice candle pushing, but can we get the closing volume? Can we get the closing balance close strong with this? Okay, so it's a big push down. Wow. Okay, so that's a significant candle. Okay, it is in profit now. That is 40.35. Holy shit, like this is a crazy candle. My goodness. Okay, I haven't reduced my risk yet. Okay, maybe that's gonna come back and bite me in the ass, but I'd like to see now. I've been holding in that drawdown for over 15 minutes now. So let's see where this candle can officially close. Because this one, if the sellers really accumulated that second top with those liquidity grabs, they could really maybe redistribute it below this daily point of interest and come down further. So this would be turning into a 50, 60, 70, 80 pip trade. But again, we always have to also mind our risk management as well. So this candle is very volatile, very volatile. But you see how it came right down to that daily point of interest. It broke it right into that green box, found those buyers bringing it right back up. But remember, the closing balance dictates. We have a long time left on this candle, 3 more minutes to go. So there's still sellers offering and could fill up that wick, continue offer to those buyers that bought that little bounce and maybe continue to break down and even go down further lower. Possibly even if it closes below this yellow line, we could advance even further with this. It is crazy candles, guys. Crazy, crazy market this morning. But that's what I mean. An 8 a.m. shift, hourly switch. If you look at your hourly candles, they completely just like flipped their mind. Look at that big bullish candle on the hourly. Look at this one, just opened. Remember, just briefly blew and slammed all the way back down. This first 5-minute candle is almost engulfing that entire hour. Okay, so this is a real significant 5-minute candle closing in 2 more minutes. My goodness. Oh, nice, Mohammed. A big seller jump in. You saw from the footprint. Awesome. Good analysis. Okay, but let's see now. We're trading back near the low of the candle. Guys, you guys know how important this yellow daily line is. If we can close below this, but also whatever this closing volume is, we're going to cut it in half, figure it out, and see if we can continue to use this to continue to go back down. But man, do we ever need a close below this kind of this neutral box right here? Because that's where all of the volume was kind of concentrated. So, man, we got to play it candle by candle and see if we got our momentum with this candle. 60 more seconds going to the close. And that would be, the second top, where we're just talking about one top This is the neckline of that liquidity grab, okay? And then there's the M, clear big M. And this is what I'm telling you. If we can close below here, push down, maybe it will retest this. Then you get that extended push down, right? But it's not going to be easy to do this. 30 seconds go. We got to watch. And we got to cut this body in half. It could quite possibly be where I entered, could be the halfway point. Okay, and 10 more seconds go into the close. And watch, we might close near the low. The next bar could possibly be ignited and drop, but I don't unlikely, because we're trading right at that daily point of interest, green box. It could open blue and just come right back up. So no, it was black, okay? So that short wick, can we cut it in half now? Right there where I entered is probably the halfway point, right there, exactly. If we look exactly, grab the fib tool, that's a pretty significant volume-based candle. This is the candles we want. Look, right at halfway is right there. If I draw the point of control of that candle, it's a little bit where I'm right there to there, okay? So we figured out now the point of control of that bar. See how it's still holding blue? It's not a surprise. Okay, now we're trading right back into the point of control of that candle. Will the sellers be here to hold it down? Offer to all of these buyers now buying at 805. Can we continue to sustain this and keep this down? Because this could be another big bullish candle driving right back in here, and we're back in this consolidated zone, and we're playing this ping pong game to continue. Okay, but now we've broken that minor trend line. We closed below the structure. We're below, if you utilize these EMAs, 9 and 200 are right there in that point of control box. But this is the way how gold is trading right now. It's very, very, very difficult until the volume is still kind of consolidated. And we're 13 minutes away from COMEX. So things are going to get even more interesting come COMEX, right? I didn't reduce my risk. I didn't go down to a break even, and I didn't reduce my stop loss yet. And I also did not take out profit when it moved down the 35, 37 plus pips. Okay, so you can see I'm playing more of a long game here today as opposed to just scalping, because, you know, I suffered some drawdown and I didn't do anything on that candle. I wanted to officially watch where that candle would close. It got the close I wanted, but, you know, this candle opened bullish at this significant point of interest. So now I'm seeing how the point of control of that candle is going to hold up. Okay, and so far it's holding up. There is a wick there. So it traded right into 50%. There is a wick. So can that point of control continue to do its job? Are we going to consolidate maybe down in here? Maybe produce a bear flag to break this daily point of interest? It's not easy to break this yellow line. This is a daily point of interest for a specific reason, this 4,208. But it is a good rejection right at our point of control and exactly right at 50% and at the 9 and 200 EMA, if you follow those indicators. But this candle is not closing for 2 more minutes. So every time it comes down here, it keeps refueling itself and building itself back up. Gold has just been choppy across the board this entire morning, even with this volatility. It's still a chop fest. But we have our rejection, okay? So far it's holding. Now we just got to flip the candle. Remember, now it's going to refuel itself because we're at the opening balance. So sellers, if they can really take control and see they're both small wicks. So as soon as it turns black, it turns into a bearish pin bar. And it could be a shooting star that continues to advance lower for a new lower low and maybe potentially close below here. Okay, so you see how where it got rejected? It got rejected exactly at 50%, the point of control of where I measured that candle. So this is not back testing. This is live, showing you how it works. There's exactly how it works. And now we got our shooting star. So now can we continue to advance we're holding for a bigger reward? Will we be rewarded? Because it kind of pissed away our profit, but we're trying to let it run for a bigger move. So we got to kind of trail it behind and see if it does what it's designed to do. So now we got our lower low printed, but now we got to follow the closing volume in the next 47 seconds. So there's a good push down. Coming down to that red line is 55 pips. And then down to that hourly right there, we've filled the hourly imbalance. That could be 80 pips. This is where, if this bar closes, this is where ideally you want to reduce your risk and maybe scale out a little bit if you still want to hold. It's up to you. But that's a 50 plus pip trade right there. Now you see right down to that red line where I had it marked from that body to that body if we broke that level right there. Exactly at that 4205.50. Here's the closing volume. Now you see it's mixed decision. It's indecision. It's a spin top. It could close blue. And then again, we have another blue leg coming back up, testing this zone. However, if the sellers close it, we might get one more considerable push. So it did close with black volume. We are right in that green box right there, but we're below that daily point of interest. We have like an ignited bearish candle, maybe to continue to fill that wick and continue to drop down. Okay, so right there, guys, is where you should ideally be managing your risk up 40 pips. I'm going to do that. I'm going to manage my risk. I'm just going to be above this block, this red block. Okay, so it's not 100% break even, it's just above that block. Okay, so you see I've reduced my stop loss now from above that red line, and you see how I got protected because I just placed it above this point of interest and London's kind of liquidity grab right there at 320. And you see how I kind of survived that, and I'm in the money now. Okay, but I haven't closed out anything, just reduced my risk. So now it's coming back up strong. Now that red block is still there. But now you can see where maybe we might get some volume down here now at this daily point of interest. Did anybody do anything, guys, down there for 55 pips? Did you guys at least do anything? No, you guys still haven't done anything? It's okay if you haven't, but I'm just asking. Christoph, you took 80%. Boom, you took out 75%. Senti, you closed half. Okay. Market is still very choppy. It's still very choppy, Mo. It's not, yeah. This thing could come right back up. But now we're 8 minutes away from COMEX, so we also have to, factor that in as well. All we can do is kind of extend these zones going into COMEX. I'd like to maybe flag down in here and maybe continue to break down during COMEX, but buyers could bring it right back up at this daily point of interest. But I've reduced my risk, so worst case scenarios, yes, I do get stopped out, but maybe prior to COMEX, I got to watch that volatility. I won't incur as much as a loss as I would have if I kept my open stop up there. So now I'm just got my stop above the red zone, relying on the red zone, see if it will continue to offer and hold this bullish asking volume back down in here and look for that next leg down. My mistake was not taking out 80% on that breaking candle right there. That was my mistake. These live sessions force me to trade a lot different than I normally trade. I'm not using that as an excuse. It is what it is. I didn't, and now I can't complain about it. Just got to continue to watch the trade play out. And the markets are very volatile. It's not even a good trading range, to tell you the truth. And I'll verbally let you guys know as soon as I get tapped out. I'm just a few pips above this red zone. There is a wick there. There is sellers there. It's a very tight stop loss. I've reduced it, Mo. I don't know if you just got on the call, but I've reduced it. I was originally above this red line up here. Okay, there is a wick there. There is sellers in that red zone, but there's still this big, strong, bullish blue volume with 20 seconds to go into the close. And then I'm going to look back at this call, look back at this trade and say, why did I not close out anything 50 plus pips? It's like that rule I have. Anything 50 plus or 100 plus, it's like clockwork. You got to do something. And I didn't. And this is going to come back and possibly haunt me. I'm going to have nightmares of this tonight. Okay, that was a strong blue candle close. So it's trading now in this zone. So it could definitely continue to break out of here. And I no longer want to be in this trade because we're 5 minutes away from COMEX. And then you could get that explosive volume, be a big blue candle. We could get maybe one more push down and we open COMEX and it continues to sell. And I've escaped another tight stop loss situation. So that's the way how trading works. You know, sometimes if you're trusting your zones, you got to let the zones play out and see if they play out. Sometimes they play out, sometimes they don't. If you don't want to reduce your risk how I did, then don't. Keep your stop loss where you continue to keep it appropriately. I manage my risk. But situations, sometimes you might go quickly and then you get stopped out and the trade moves in your intended direction. That's why in this situation, I didn't go right to a break even. I left it with a little bit of room and it's still holding up just above that red zone. And then you will really see if this red zone holds up. Then we've had 3 attempts where buyers have attempted to break that physical point of control on that big bearish candle, which opened at 8 a.m. and it's still holding. Then you can kind of verify yourself how strong these points of controls can therefore be. That's why these zones are good to understand for where to execute trades, to take trades, where to take profit, where to place stop losses. That's why when you learn these zones, they can teach you everything you need to know regarding risk management altogether. So it's like a lot to learn. But also this daily position is also holding strong. So now I got the move that I'm looking for. See how it came in there? So 3 times those sellers on the hourly are holding that bar down right at the belly of this candle. So they continue to break it down. Now it continue to come down there. Again, now with 2.5 minutes to go, can those sellers really close it with conviction, go into COMEX and really maybe redistribute to the downside? But again, when it comes down, higher low, higher low, higher low. So there is like some buying going on down there. But we've got the move, like I got the move that I'm looking for. It's just sellers cannot close it with the conviction I need. Man, what a dogfight and shitty volume this is today. We're trying to make something out of this garbage volume. Absolute dog shit market, Akash. I agree with you 100%. I could not have said those words better than myself. So if we can escape this with a good breakdown, we got to be thankful. If we get it down, back down to that hourly white line, that's 75 pips. And ultimately, if it can break all the way down there, it's 100 plus banger. But man, all I want to see is a nice big bearish candle closing below here so I can flip this green box red. We're below the daily point of control. Maybe we have COMEX. After all of this accumulation, they can redistribute to the downside. But a lot of buyers have been accumulating too, both ways. So they could bring it right back up, then drop it down. So 60 more seconds to go. I'm still in this. Might be making a lethal mistake here. But we'll see what happens. And then it's just a dog shit session with this volume. What do you guys think? Bearish or bullish in the next 45 seconds? Bullish being above the red box. This is bullish. And bearish being below this green box. While I say that it could, yeah, bullish, then I'm getting stopped out then if it's bullish. Yeah, it's good. It's hard to say. Hard to say. But what I can say is we're going to get an extreme amount of volume coming in. So get ready. These candles are going to be large. So easily my stop loss can get taken out if this thing doesn't close strong down in here. Okay, here it goes. Here we go into the close. Sellers are pushing it into the close. 4 seconds. Can we engulf? Cut that bar in half quickly. Okay, we got a good close. We have an ignited bar. Right away, can we, come right up to the halfway point? Right there, cutting it in half. Okay, it's blue. If they can continue to keep it down, right there. Now we're testing the point of control of that previous black candle, but it is COMEX, okay? So it might break this and come back up and test our red zone. And then you see it's barcoding down here. Black, blue, black, blue. We got our retest. That's good. There's our shooting star. So hopefully now with this momentum of COMEX, they can redistribute and break this red line and keep it coming down. So we did break, but they're bringing it right back up. Now you got this spin top indecision dog shit of a candle. And wow, how can they maintain it right at this daily point of interest at this yellow line? This is disgusting, but that's the way how the market is operating today. Okay, so it came right back up and testing 50% again. If you can't hold, we're trading right back into our red point of control above us. My stop loss, again, is just above it, and I could get stopped out, but I'm preventing it, from you guys that were saying it could be bullish breaking right through here. But we have a rejection. Wasn't right. It's not right at 50%. It's at that point of control. A little bit above, a little bit below. I didn't do the zone on this because it's too tight in here. Okay, so there is sellers there offering. This is the first 90 seconds of COMEX. It's not the kind of candle I expected. I thought it would be a lot more volume involved, but you got to take what the market gives. So now sellers are bringing it right back down. So can this now be the flush? After it got rejected, we got a lot of sellers. There's no buyers producing any new higher highs. So sellers now, their job is to continue to create a new low and break this red line or close with some black volume below here so that we can close below this daily point of interest and continue to push down on the next bar. This is crazy and very difficult if you ask me. Okay, we got our candles pushing down. It is now a bearish pin bar. Hopefully can turn into a shooting star, but follow the volume too. If we close black below this green box, we have not closed below there. Then I'll flip this green box red if we can do that. Maybe we can build momentum of this zone to continue to push down, and then we're creating offers from this red block to this red line to that red block, and then get the flush that we're looking for. In order to get trades in a shitty environment to 50 pips, 75 to 100, it's not easy. It's not easy. You guys can clearly see how many times I could have taken out profit and I haven't. So I'm looking for the market to reward me for holding this, because I could have got out 1 time, 2 times, 3 times. This is the 4th time I can take out profit down here for above 50 pips. Am I being greedy, or am I just going with the flow of the market? I don't know. I might get punished again, but I'm convinced that sellers are pushing it down. Okay, so we got the push, but we got to continue to make lower lows in order to continue to push. We don't just want higher lows or equal lows. And we have not produced a new lower low below that red line right there. So now we got to follow the closing volume, right? We are still pushing down. Let's go. Come on. We're going to, like in the title, what it says, we're going to get pips or we're going to die trying. That's the motto of the rest of the year. we're going to get pips or we're going to die trying on these calls. Just like 50 Cent. Get pips or die trying. You might see me die on one of these calls. Or you'll see me get pips, one or the other. Shout outs to Dave and the signal. See how I switched my bias from the buy and I went into a sell. Okay, so you can do that too. You can switch focus. Wow, now we're getting the bleed out, guys, okay? So now, you know, that's 60, 70 pips. Down to that hourly white line is 75 pips. This candle's closing in 15 seconds. So we'll call, if it closes below here, we got to flip that green zone red. Because if it comes all the way back up, we might be now trading into this zone. We've moved away from this zone. So my tight stop is in the money really, really, really good. Here we go. Another ignited bar. Go through the motions, guys. You guys got to do your shit, guys. Don't wait on me. Okay. So green to red. We've moved away from that consolidated zone. If we cut this black candle in half, it's cut right there. That previous wick, this supporting area, body to body, was a point of interest on those 5 minutes. If I cut it in half, open, close, halfway point, this could be where it gets another wick and creates another lower high. However, it's bouncing right off of that hourly white line for the 75 pip total. And now it's coming all the way back up to possibly engage in this red zone or 50% of this candle. I still have not taken out anything because I'm trying to educate to you guys, but you guys got to do your own thing, please. Okay, first thing I'm going to do is go to a break even now. I haven't been at a break even at all in this trade. Now I'm at a break even because I can see we clearly have moved away, diverged away from this zone. Those multi-tests in there were below the daily point of interest, and now we got this red block above us as well. So now I'm just trailing my winnings behind. That's all I'm doing now. And I did not take out anything on that. I should have on the open of that candle, but I was going through the motions of telling you guys all of this shit up here. So unfortunately I didn't, but let's see. If I get another attempt, maybe I'll close out down there. Maybe sellers will break it down even further. Okay, we can't ignore if it continues to push down, it could fill all the way where this bullish move started at 6 a.m. So if we look at the hourly move, you know, we have that hourly candle that just came down right there. That's why I have that white line. That was where 5 a.m. closed, and that's where 6 a.m. opened. So we came all the way down there. This hourly candle still has 33, 32 more minutes still to go. So, you know, it's got a wick, right, bounced off. That's why I like, you know, as a scalper, I like those. But if you're holding on a higher time frame, you still have a big bearish hourly candle still with 30 plus minutes to go that could continue to transact down in here and fill these wicks. And then you get a bigger move approaching the daily opening price of gold and maybe the lowest point of the day. So if you're still holding, there's now what you got to watch for. You got to do your cut analysis. You got to figure out your zones, all of this stuff. Are we going to consolidate down in here now where we'll be buying and selling down here? Have we now created a little bit of a trend where it's making lower lows, lower highs, lower low, maybe another lower high and a new lower low? Maybe just me mentally, I need to take out some profit out of the market just to, you know, mentally get me clear on this by accepting some profit. Or, you know, maybe we got to continue just going through the motions on this trade. Yeah, we're in shorts. Nichelle, we are in sells. You know, there was signals prior up here. We got in a little earlier. We got in over here. I you know, remember it was in drawdown, placed my stop loss above there, and then that 8 a.m. candle came down, and then we're watching now where the pullback came into the point of control, continue push down, still pushing down, and this candle now is closing in 90 seconds, and so this was the update right here. 42.15 is what the signal had looking for. So there's the one top, there's the second top, and that drop down there. So if you took it from 42.15, should be at least a 100 pip move, guys. Okay, we got in. I got in a little earlier over here, but still running in profit, but trailing behind. So, you know, in order to get those intraday trades to 100 pips, sometimes you got to go through shit like this. You're going to watch your unrealized profit go away, come back, go into draw, all of this. You guys know, you guys are traders. I don't have to explain this to you. But normally, I'm happy. I'm sufficient with this as a scalper. But I'm trying to show you guys, if we get a trend and we get volume, we can continue to trail our wins behind with it. Okay, so we got the candle. I got the candle I wanted. There's the rejection. There's the bearish pin bar. All we're doing now is fighting this hourly location, 4204. Now we got our shooting star. There's the advancement after the retest. Now the trade turns into 90 pips. If it comes all the way there and we retest right down at those bodies, that's a 100 pip trade. Now if you get 5-minute volume closing below the white supporting line, we could momentarily turn that into resistance and continue to flush. Okay, but there it is. There's the close below. We got a bearish candle. So if it's quick, if it's a quick rejection, we can fill that wick and get those pips down into there and be a 100 pip trade. But right there is basically 85 pips. I know a lot of you guys are saying, Ron, close out, take some, sweat your, you know, like, but it's okay, guys. You know, so I appreciate you guys' concern, but I want you guys just watch your accounts, okay? When you guys are happy and you feel like it's time to reduce your stop loss, take some profit, it's all up to you. There's the beautiful move. We got kind of that lower high and we got that drop, but now it's fighting, guys. Now you clearly have to see. This was that big 5-minute drop right there. 6 a.m. it came all the way back up. So this leg is filling all the way down there. So this is a time you got to ask yourself, if you're still holding, yes, you could get that break, but this is where it could be a double bottom right there and then start to advance back up and test this red block and maybe even higher. So this is where you got to ask yourself, at almost 100 pips in profit, should I be taking something out? Okay, and that's what I'm doing. I'm going to take out 90% there at 4,200, exactly psychological level, and I'm 100 pips out at 80%. So wow, that is like a trade. I don't normally hold trades this long. Okay, so you know, Dave gave me that confidence going in. You know, I was in that little buy for that scalp buy coming back up, but then I utilized the SST signals, higher time frames, getting it, and jumped in, switched the bias, and we got that push down. So this is, now you can see how you can trade with trade ideas. And if you have one bias, I didn't see the signal until after. So you see how I switch focus? I'm not naive and to understand that. I can even go against my own bias. I don't have an ego as a trader, nor should you. No trader should have an ego. We just go with what the volume and the market presents us. That's how trading works. I've checked my ego out the door 20 years ago because I don't have an ego anymore. I'm very humble in these markets. I know that I can lose everything in one candle, right? One trade. But at there, 100 pips, I'm happy. So I've accepted 80% profit. I'm happy down there no matter what happens now. And then I also have 20% running at break even. So my next runner, if we can start to come down to the opening balance or the nearest low, I might close that entire trade. The rest, the 20% remaining. Yeah, Mohamed, you were correct about that. The big seller jumped in. Absolutely. Yep. That's why you can start to use a different, you can use an additional analysis. You can use next level. You can use depth of market. You can use to see where these orders are coming in. Like Mohamed, was that order like right around that block up there at 42.15 that came into the market? And you can kind of maybe see how they've been lowering the offers down. Guys, you can utilize me as a leading indicator because I'm live with you guys. Unfortunately on YouTube, there's like a 10-20 second delay, but you know, like someone said, Ron, you're my leading indicator. That's fine. If that's the way how you got to look at me, that's fine. I'll help lead the way. I'll navigate us through the range, the garbage, and hopefully we do get some profitable trades. So guys, that is a good trade. And now we're going into 8:30. It could flip back up. But if it comes all the way back up, I only have 20% remaining, right? So I closed out, you know, so I'm happy. You guys got to understand my mindset. I want you guys to have my type of mindset. You can't worry about the woulda, shoulda, couldas, this, that. Yes, it could drop even further, but you still got to understand there is still technical trading involved. Like, you guys got to understand why I took out the pips there. I showed you right there, it bounced. That was a big bounce. You can't deny that those buyers didn't bring it all the way up there. So it did come up all the way up there. We just sold that entire leg coming all the way right back down to that exact point. So what happens if it's another big double bottom and another big blue leg coming through here, right? You don't want to give back 100 pips to the market. That is someone's daily goal. That could be some professional traders trade for 50 pips a day. That could be 2 days worth of work right there and can take a day off tomorrow. You know, I know as traders, we want more. The greed kicks in. We want more. We want more. We want more. But eventually that greed will kill you. So, you know, take a trade, be happy with your results, and continue to manage your risk. And that's it. That's how you have to trade. Some days are better volume than others. Like you see what we were trading here. We had someone called it dog shit volume. But you see, if you let them accumulate, you see when I had, you know, up there, that's where that's where it initiated. I believe that second top up there, when I was in drawdown, when they came up there, but I told you guys, I had my stop above London's high right over here. So I had my stop above there. Yes, they did try and come up there. I wasn't panicking. I don't know if you guys continue watch call. Did Ron panic? No. I trust my levels. And then the only other thing was, yes, I knew I could have got stopped out, but I wasn't risking my entire account. I wasn't risking everything, 1% on one trade today. So I allocated a certain amount. And then as the trade, you know, trade management, as it started breaking down, I told you guys, started to reduce my stop loss, but I didn't go to a break even, right? Because you see, if I went to a break even, this is when, like, you know, you're journaling post analysis. If I went to a break even, that candle could have got me, that candle could have got me, and that candle could have got me, and I miss out on 100 pip move. So I told you guys, I kept my stop loss just above this red zone, and you can clearly see how it held up. That's a tight stop loss. Some of you guys said, Ron, that's very tight. But I trusted my analysis. The point of control zones are no lie, guys. I'm telling you, if you learn this, it can literally change your life. And it's very basic strategy. It's not complicated. I'm not using any fancy terms. I'm not telling you break of structures, change of characters, inverse validated zones, manipulation, this, that, inducements, nothing. I'm just showing you. Look for clues in the market. Double tops, we can identify those. A big bearish candle, how can we not identify that candle out of all of these dog shit candles? And that's the basic one that you start your analysis off of. And look, it came in there 3 times and dropped. Again, I cut that one in half and you see how it came in there. If I did my zone, that would have exactly represented the point of control of that candle. Came down in here. If we cut this one in half, you see right there, it came a little higher, but continued to advance down, right? So guys, if you want to make trading easy, you can. If you want to make trading difficult for yourself, you can do that as well. I'm teaching my kids, 9 and 14 years old, this same style strategy because I know it works. I wouldn't be teaching my kids this stuff. Believe me. I know a lot of you guys are friends. Some of you guys are strangers. I don't even know you guys. But I wouldn't be teaching this to my own family members and my own children if I didn't believe in this. Like, would I be wasting my time with my kids teaching them this? No, because I know it could possibly, if they like trading when they get older, it could maybe give them another outlet in life. I don't have to, you know, like, their dreams are their dreams. I support their passion. I'll support their passion. But I just want to know that if they ever need a trading coach, their dad is here for them. But I teach them this. My daughter loves it more than my son right now. Her job is to cut the candles in half for me. So when I'm trading with her, she comes down here and she cuts my candles in half. I don't even do it anymore. She's my high frequency trading machine. She comes here, I tell her that candle, she's already cut it in half. She even uses the knife. She uses this emoji tool. It's one of these things. It's like a knife and she cuts it in half. It's like when she cuts her cheese string in half, I tell her, can you cut this? And she cuts it. Do I accept adoptions? I can accept. The more the merrier. The bigger the family, the better. Okay, guys. So we can still watch this, but we got to also do a NASDAQ analysis. Guys, hit the likes. You know, I don't know why. There's only 200 viewers on YouTube today. Is everyone taking a day off on Monday? Subscribe to the channel if you guys like that detailed breakdown of a live trade. This is not post analysis. This is not a trade I took and then I uploaded on YouTube 2 days from now and say, you should have done this, you could have done that. You guys walk through that trade with me, where I entered, drawdown, profit, reduce management, taking money out, all that shit. There's no excuses here. So you guys can live through all of that. And we're also going to educate later today on swing trading. So don't miss out if you want to learn how to swing trade. Guys, do you guys find this style of trading easier? Like just identify points of interest, do a top-down analysis, points of control, and just trade with proper risk management? Someone asked me, Ron, what's this called? I don't even know what this is called. This is reading price action, zone-to-zone trading, or I like to call it like tape-to-tape trading, line-to-line trading, and there's no specific names, guys. It's just studying the anatomy of a candle and zones. That's okay if you didn't enter, but you want to learn. Like, guys, this is the place to learn, right? Okay, so you see now it's making some 5-minute support right here. Like it's not a secret, right? That's why I took out my 80% down there. You see now how it's still holding right here? So this is building that zone now. So, but it's still, you know, with volume below this this hourly white line, okay? So you see where it's consolidating now. So if we go to the hourly candle, you can see what we're fighting right here. There's a wick there, and a wick there on those previous hourly candles. This hourly candle now has 19 minutes to go. So it could continue to fill these hourly wicks as if these were 5-minute wicks, but that's a body to body, a wick and a wick. There has been a lot of support at this level since Sunday night, right? And now we have that hourly volume pushing down with COMEX that could physically close below there. And next hour, it could continue to come down and target the lowest point of the day. However, next hour could come up blue, and test 50% of this hourly candle. So if you're more of a higher time trader than me, you might have to dissect when this hourly candle closes, open, close, get your Fibonacci tool and find out, cut it in half and find your point of control. Look at where it could be, right around this yellow line that we have for our daily point of interest at 4208. So when I look at it on the 5 minutes, there it is, that yellow line. That could represent 50% of the hourly candle, and we've already identified it with this zone. Okay, now we got, again, it came up, lower high. They pushed it down, came back up, lower high, came back up, lower high, and they're still there trying to push it down. Okay, so buyers have not advanced it for a new higher high as of yet. Sellers are still there. But every time we come into this zone, this 5-minute zone, there's buyers, and there's buyers. And then if we get one more push down, and it breaks down and trade turns into 120, 130, 140 pips down to the opening balance, I'm going to close my remaining 20% and get it out and be done with this trade and move on. That is my daily goal right there. Like, I don't even need to trade NASDAQ or US30 and go into Wall Street. If I wasn't trading with you guys, I would be outside shoveling the driveway. I would be going for a coffee right now. But we know we can't do that because we got to keep going. We got business to take care of. We're at work right now. This is just shift 1, right? Now it's kind of a 5-minute lunch break, coffee break, and we got to go back to work. But when we go back to work, we got to work smart. We got to work smart. So you have to now think about, if you've taken some profit, are you going to take that entire profit and risk it on your entire next trade? Or are you going to take a certain portion of that and apply it to your next trade? And if you do get stopped out, you still make some money at the end of the workday. Do you guys understand what I mean by that? This is where you have to mentally, inside your head, calculate how you're going to go forward. Like, you're working. Are you going to work smart? You're going to work stupid. You got to work smart, not hard. Okay, so you got to understand what you're doing. We're at work right now. We're clocking in, and we haven't clocked out yet. Lee, no, I don't snowblow. I got my parents a snowblower. I shovel. I'm old school. I shovel. It's a good workout. I get my cardio done. Yeah, a lot of people say, "Oh, Ron, you got money for a snowblower." No, I haven't. I bought it from my parents. They need it, but I'm happy shoveling the driveways. I used to do it as a kid. I used to go door to door. You know how much money I used to make? $10 a driveway. I used to go. I tell my kid, go out there and make some money. He's lazy. I used to make $10 a driveway, like heavy packing snow myself. 10 driveways, $100 when I was like 13, 14, 15. I was coming home with stacks of cash like this. My dad thought I was, what the hell is this kid doing? And just hustling the driveways, door to door, neighbors knocking. I haven't seen one kid in my generation come to my door for 10, $20 to shovel my driveway. Not one kid in my neighborhood. No one has that work ethic anymore. No kids. Okay, guys. So see, we got some volume closing below white line. Still just now it's consolidating, you know, like blue, black, blue. So this is where it could consolidate down in here. Oh yeah, Nigel, now it's easy. $50 for a driveway shovel with inflation. No one, if they came for $10, I would hire them all winter. Okay, so it's 8:45, guys. We did some analysis on US30. Do you guys want me to do the analysis on NASDAQ? We get that out of the way. Then just before 9 a.m., we can take a break, 5 minutes, come back, and we watch Wall Street. I trust that you guys can manage this trade. I have 20% remaining from the sell up here at break even. So worst case scenario is it comes all the way back up, blue, 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 right up to there. I get clocked out. I just lose the 20% of unrealized profit, okay? I closed out 80% down there, so there's no risk. You guys manage this on your own, okay? I'll leave it like this, so if we come back to it, we can see what's going on. I already have inputted my everything. I have it where it's automated now. And I also have a full TP coming down into here if it comes down here. I'll be closing the remaining 20%. But I'm happy with this trade regardless. I got the 80% bulk of the trade right down into this green zone. Okay? It's like clockwork. 50 pips, 100 pips should be doing something. Okay? I'm going to move over to NASDAQ now because now you see the indices are opening up a little bit. There was US30 came down. I see it almost came up to the highest point of the day, came back down, maybe double bottom, maybe coming back up. So now there's volume opening up. Okay, we've already done our analysis on US30. Now let's move it over to NASDAQ. Okay, so NASDAQ on the daily. And please, guys, manage your risk on the gold trade. Okay, I'm not your financial advisor, but I'm going to continue to remind you guys to manage that trade accordingly to what you want out of it. I might want something different than you want that, but you got to manage it. Ultimately, you are your own trade manager. Okay. This is the all-time high of NASDAQ. We reached here, if you guys remember, just before Halloween, end of October. 26,285, 26,300 all-time high. Can we draw a zone at that all-time high? From the wicks to the bodies, right there. I might bring it down to those bodies, okay? Make it red, advance it into the future. Look how close we are to getting up back up to the second all-time high. And ironically, we have FOMC this Wednesday. So that could dictate what happens up there. Is it slowly going to creep up here and then lower interest rates? We get a new all-time high. Is it going to come up here and do something and they kind of just, reject it? But then the next day, we build and break out of there. Anything can happen there, okay? This is a significant double top area that we have to acknowledge and realize. Was there a nice pivot in the market right now? You can clearly see it. Where it came down and where it stopped. This leg down, lower low, lower high, lower low, lower high, lower low, lower high. And that big drop right there, November 20, and then look, it's the next leg up. So there's gotta be some sort of support there. Then when you look to the left of the chart right there, yellow line, that's where it was. Look, red. Going into the future, that's where it closed above green. That right there is where you could have determined this zone and flipped it had you have done a real thorough top-down analysis. And look at when it came right back into that block, it went back up. It's just like my gold trade on the 5 minutes where it came into that 5-minute zone. You know, like right there, drop, 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 went all the way up. That's why when it came in there, look at, are you surprised that it's not breaking that zone? Okay. So that's what you got to understand. That's why I took out the full trade right there. And I'm not, you know, woulda, shoulda, couldas. You got to trade very automatic. So this is where the daily candles came down and punched right back up. There's another area right here. There's where it pivoted right back up, and just look where it stopped right there. It came up and just stopped there, went back down. Look at it there. It came up again, but then closed above. And this yellow line is playing, look at, there's a point of interest, rejection, rejection, rejection. There's a body that closed above November 26th and continue to move up. Look at what it's retesting now, this yellow line, and continue to move up, okay? So we got some levels, and also inside here, what about this level? This big bearish candle, can we figure out 50% of that? Absolutely. Fibonacci tool, ignited bar, open, close, 50%. Right there, cut it in half. Can we identify a zone, a bearish point of control of that big bearish candle? There it is. Okay, now you're seeing NASDAQ. We did this with gold on all time frames. Now we're doing it with NASDAQ. A completely different security, different time frame, but same shit. That's a big bearish candle. That next day was bullish, just like a 5-minute candle where it came in and got rejected. Then it needed the next candle, lower high, then drop. Look how many times it traded in here. 1, 2, 3, 4, 5, almost 6 times, and they continue to push it down. So you advance that into the future. Look at on Friday. We traded right through there, created a higher high, closed inside. Now we're trading with today's bullish volume right in that zone. So it could close above, close below, or trade inside. This is where you got to follow today's NASDAQ candle for the next 8 hours until it officially closes. Then we'll determine, will it close above, below, inside, all of those things. Okay, so now following Friday's volume, Friday opened, initial drawdown, higher lows all off the bottom, so showing strong momentum buying on the daily, and it continued to come up, break the previous day's high, create a new weekly high Friday, and then it got rejected and closed right there. So do we have a opening closing price of interest right there? Close Friday, open today. Look at the number. 25,700 on the dot, right? Ooh, gold, I got a notification. Gold is breaking down, guys. So look at it came right back into that red line, rejection, big bear candle, absorbing all of that. And here's the redistribution. So it took out that low right there. And now we're dropping, guys. Wow, wow, wee wah. I like, very nice. 100, I'm taking the rest, 20% out there. My entire trade is closed. Daily goal is met. Very nice. 125 pips. There it goes. Yep. Shout outs to SST Signals for calling that, recognizing that, and trading from 4215. That was a bigger move, 4215, and now we just broke 198. So, wow. Okay. So I got the notification right there where it just broke, and I'm out of this trade completely myself. Okay. So right down into there, 125 pips out. I really respect today's daily opening position and the lowest point. Yes, it could go down further. I'm content. I am happy. It's like when you eat and you're full and you've had enough. That's me right now. Okay. I know that's a stupid analogy, but that's the way you got to look at trading. Okay. Once in a while, you're going to get full and it's good enough. Okay. You can't keep forcing food in your mouth or else you're going to become obese and you're going to make yourself sick. Okay. So you got to have limits at some time. Okay. So that's a full trade. I'm going to write here, full trade. If I can spell here, full trade closed. Okay. Just so if anyone comes on the call, they know what's going on here. Now let's just back to NASDAQ. Okay, where were we? On the daily. Okay, so it closed, opened, it briefly came down. So we do have a low of the day. Where is it? Located right at the bottom of the red zone. Okay, so you can clearly see it right there. Right at the bottom of the red zone, it came back up. We're pushing, and we've been filling. Friday left a big back filling wick. So it's not a short wick, it's a big wick. But we have that buying momentum driving right through here. At the top of the red zone, it's already created the highest point of the day right there. Okay, so it could continue to fill. One thing we have to mark off is if we continue today, how can we not acknowledge Friday's high 25,833. And then if we continue to build our way back up, you have the yellow line all the way to the all-time high bottom red zone. What you can do if you're intraday is from the bottom of the red zone to this yellow line, cut it in half right there. 925. That's a cut point right there. Okay. And if you don't believe me, grab your fib tool from the yellow line, take it up to the bottom of that red zone because these zones are very important. There it is. 50%, 923, 925. Nice psychological number. So if we continue to break from 830, it's another 100 pips to 925. That could be resistance. If it breaks there, locate the bottom of the red zone, 26,000 exactly. And then continue, cut point halfway into the all-time high supply. Same shit, different story. Okay. Now we have a very big bullish daily candle coming back up. Okay. So on the 4 hour, let's see where all of this volume came in from. So the 4 hours, obviously on an uptrend, higher highs, higher low, higher high, higher low, higher high, higher low, new higher high spiked out on Friday at 10 a.m., pulled back. We got higher lows building to maybe create it, come back up there. But you can see in the past, this was that double top on the 4 hours, came in here, back down, came in, big drop down. Came in again here, drop down. Now we're coming right back into here. So right now we're moving on the 4 hours. Big bullish candle was Sunday open, 6 p.m. to 10 p.m. Here's 10 to 2 a.m. Here's Europe, 2 to 6 a.m. Insignificant spin top, 4 hour candle, doji inside. And now we're opening 6 to 10 a.m. with 1 hour to go. Open still holding this daily point of interest yellow line. And we're continuing to push higher highs to today's daily high. Will we get 4 hour volume closing above here? And can we extend out in Wall Street and continue to break? Or is Wall Street going to bring some selling pressure coming down? So 4 hour candle is still moving, but you guys were trading in this red point of control from the daily, but we're almost clearing it. We're almost at the highest point, and it is still building through here. Hourly candles, okay, I can see crazy market on Friday, 8 a.m., 9 a.m., big punch. Look at how crazy it gets. 10 a.m., then all the rest of the day was garbage volume. Dog shit volume is today's word of the day, what we're using it to describe that type of volume. No better word than dog shit volume. I think Akash was his name on the call that coined it that. That was a great name. So here we're trading now. 2 a.m. London, bearish candle. Come back up 4 a.m. Look at it, just barcoding. Blue, black, blue. We just tapped into the highest point of the day and it's still indecision. So on the hourly, still undecided where it's going to move going into Wall Street. Okay. So yes, it could continue to sell back down, but on the fives, this is what we got going. We're trading at the second half. From this yellow line to the top right here. So it's coming down, going back up, going down. If I was trading 5-minute candles, you can see that 5-minute candles make their own structure. Came up, there's resistance, back down. Came up, there's the top, sell back down. It's coming back down to this daily, it's holding. Okay, there's the volume that closed above. You can see it closed above, uses the red line for support. That took us to the daily high right there at 820, cold mix market open. And then you see it kind of came down and coming right back up. So right now, we got some 5-minute volume we can watch going into 9 a.m. and 9:30 to Wall Street. Let's just add our daily bar indicator so we know our opening price hit the lowest point of the day, came right back up. It was right there, 820. That it got the wick, and now we're coming right back down. Utilizing the EMAs, 9, there it is. We're above the 9 EMA, and the 200 EMA is right here. Again, 5-minute volume. We'll wait more towards Wall Street, see what develops. Let's leave these two securities side by side. So we have NASDAQ on the right. We have US30 over here on the left. Okay. And so US30 right here, NASDAQ over here, gold. Continue to come down and tap into that lowest, the opening price, yellow line. And that's where it's wicking off of. Okay. I'm not in this trade anymore, but do you guys want me to continue to analyze this with you guys? Let me just move this back because the trade is completed. And we can look for something new. Okay, so at this level, you should be doing something. Okay, that's the opening balance or lowest point of the day. Whether doing something entails bringing your stop loss and reducing it to break even, that's doing something. Accepting some type of profit down there. You don't have to close the entire trade, but taking partials, that's doing something. Lowering, if you have a trailing stop loss, you could be lowering your trailing stop loss. That could be something you're doing. However, if you're holding this open trade, that's another option that you can do. Not what I would do, because I do intraday trading to make some money. We'll do swing trading later in Tokyo session, and we can utilize swing trading education to help you guys out. So if you guys don't know what I'm saying, on our website here, this is our weekly schedule. It's updated every Sunday. So we have our trade ideas throughout the week, Monday to Friday. Today, Monday, this is our 6 to 10 a.m. call. Then later tonight, we're coming in 6:30 to 8:30 like we normally do, but we're not scalping Tokyo. Now you can see it's an intro to swing trading, higher time frame analysis. So we can do gold, we can do any security, but we're not going to be scalping. We're going to be doing analysis from monthly to the weekly, daily, and watching 4-hour candles. So we can potentially maybe look to get into a swing trade this week. And then we'll come in Monday, Tuesday, Wednesday, and we can monitor it and we can see what's happening and we can talk about it. And maybe we get in a trade, maybe we don't, maybe it's dog shit volume, maybe it's great volume. However, we're going to introduce a little bit of swing trading on all of our other sessions. And don't forget, Dave is live in New York with the snipers, Tuesday, Wednesday, Thursday, New York's. We have some post New York sessions, and don't forget FOMC is noon, starting noon to 3. Okay. That's our schedule. And guys, we did drop some free blogs available, lots of them. SST daily outlooks for the members, market updates over here for everybody. Swing trading blog we did this morning, we read about it. Maybe have that while you're reading your coffee, be more understanding of swing trading, what we're going to introduce. And if you want to learn, every Sunday night, we're going to release a stock analysis. We started off with NVIDIA, learn about it. And next week is Apple. And we're going to continue with every Sunday a new stock analysis, because we're going to be getting into stock and options trading and education very soon in the new year. And I cannot wait for that, guys. We are called Stock Sniper Trading. We're not Forex trading. We're not futures trading. We started day one trading stock market. So we kind of built our way into Forex and futures to educate the world, because it's 24 hours. Stock market is just, you guys know, 9:30 to 4 p.m. So when you want to target all, but it's doing the same type of analysis, price action, okay? So if you're buying, you got some nice return candles. You made 50 pips on a return, but it's still, sellers are pushing down. So you got to be very careful, guys, okay? What would you like to watch going into Wall Street? Would you like to watch gold? I can come back to indices around 9:15. It's completely up to you. I'm going to take like just a 3-minute break. I got to go to the washroom and just make another coffee. If you guys don't mind, don't leave the call. If you're on YouTube, subscribe to the channel, hit the like button. I'll be back. Ron just needs to go to the quick washroom, make a coffee, and I will be right back. Okay, and you guys can chat amongst yourselves in Zoom and YouTube, and we'll be right back, okay? I suggest you guys too, go for a coffee, go for a smoke, go to the washroom, and we all come back in about 5 minutes, and we can get ready to watch Wall Street market open, okay? Be back in a second. Back, guys. Okay, welcome back, everyone. Holy shit, gold took off from the opening balance. Anyone buy off that yellow line? That's a proper area to look for buys. Remember, sellers are closing their positions where buyers are. What better area where the opening balance is very bullish? You guys probably won't believe me, but I took a 1 minute scalp off that level. I know some of you guys don't believe me, but I took a buy. I didn't get that move, but I got 30 pips and out just right off of that, guys. And then look, did it close above this green box? Yes. And there it goes right back up to this red block. Okay, so you can see, guys, sometimes sells are nice, buys are nice, but trades don't go forever. So there's got to be a point where you got to do something. Off topic, sorry guys. I got a text I completely forgot. Today is Monday. I have to take my son at noon. I completely forgot because I had other things I was going to do. He's got to get his braces taken off today. Today's the day. He's got to be there for 2 hours, and I got the reminder. So he's excited. I got to go take him out of school. He's getting his braces taken off, but he's got to get a retainer put in. He's like, what, a retainer? He thought that's it. No, I'm like, no, but you got to use a retainer now. And I got a new barista machine. So I'm making my own macchiatos with espresso shots. So Ron is his own barista now. So if you need a proper espresso, macchiato, coffee latte, cappuccino, mochaccino, whatever you need, I'm your barista. I will help make you some coffee. Man, it's good coffee. I don't think I'll be visiting Tim Hortons anymore. Okay, I'm done with Tim's. That's it, Patrick. I got proper, real nice coffee in the house now. In 3 minutes, you have a real coffee. I suggest everyone buys one of these machines. They were 50% off on Boxing Day. When price gets too high, we got to cut it. They're good machines. Get yourself a good coffee machine. It'll pay itself out in the future. Believe me. I buy 3 coffees a day from Tim Hortons. $2 a coffee. That's $6. I drink coffee every day, Saturday and Sunday. So multiply it. 6 times 7, roughly $40 a week. That's $150 to $200 a month. So when you add that up, you're well over $1,000 to $1,500 a year just on coffee from Tim Hortons. I bought one of these really, really nice barista machines for $500. So I'll pay it off in the coffee right now in a couple weeks. And it's good coffee. It's really good coffee beans. It grinds the own coffee beans. Jerish, you're done trading for the day? Amazing. Good job, brother. It's sad to see you go, but I'm very happy for you. You did what you needed to do, brother. And Sean, is it a business expense? You better believe it. When my accountant asked me, Ron, what is this? I need coffee to do my job. You better believe everything is a business expense. Anyone watch UFC on the weekend? It's a business expense. Got to write it off, some entertainment. No, I'm just joking. I'm joking. It's not any financial advice. What do I think about the fight this weekend? Man, Jvali was Marab was fighting, but he had a broken hand, and he said he was sick. He had some virus, but Peter Yan was impressive. Yeah, it was a good fight. Regardless, both of them are warriors. I love watching them. They're both animals. It was good. But we got to see maybe a trilogy with these guys. They put up good fights. Yeah, finally Marab lost. There's got to be a time. You can't always win. Marab is now gone Hollywood. He's more into acting now. with Nina. Okay, guys, we're going to take our focus off of gold. We're going to watch now because we're about 15, 20 minutes away from Wall Street. So right now, Dow Jones, nice little double bottom right off this daily point of interest. Okay, so guys, get to know whether you're in a trade or not. Now look, like second bottom at the daily position at the opening price. If you bought like somewhere in here, you're in the money, you're in the profit. Okay. So, but do you see how the trade had to come back down, right? So even if you're in a trade, yes or no, it doesn't matter. You're learning. Look how the opening balance is being respected today. You saw in gold. So right there, when it came down to the opening balance, look at it. Big wick, and then you got a beautiful move. So if you're looking to buy, these are the not A plus, but A setups. These are the high probable setups, right? You know, like when you're selling at a high zone. When you're buying here, so this is what we got to learn. Someone said, I'm excited to learn with SST going into the new year. Well, look at everything we've been teaching for the entire 2025 and since we started in 2020 is you got to learn this, guys. Got to learn. Got to be very patient and disciplined. Look how many times it's been respected down here at the opening balance, okay? And look how it's been respected. Sellers have not, they've attempted to break it down, but didn't succeed. That was an impulse candle that broke down. No volume close below there. Now it's got that nice leg coming right back up. Bronson, yeah, US30 is really, really nice right now. Okay, but if you're not in a trade, I'm not in a trade right now. So do I just want to now just buy the highest point of the day because now, you know, I'm fear of missing out. Oh my God, if I don't buy now, I'm not going to get another chance. No, that's not the mentality you want to have. Now this thing can go as high as it wants to go. I don't care. I'm not in the trade. If you guys are in, I hope it goes higher. If you guys are selling, you could be testing on a sell. What I could be waiting for is a nice pullback where to come down into here, back down into here. I could buy a pullback. I'm not the only one considering buying a pullback. There's got to be, if you look at your depth of market, there might be millions of pending orders waiting to get in down at this level, at this level, at this level. I'm not the only one. We're not the only ones. So we just got to let the market do what it wants to do, figure out points of control, points of interest. I feel like we missed out on the buy already, like right in here. So the last thing I want to do is buy the highest point. Because you know, when you do that, when you buy the highest point, then it comes down with that selling leg. And then you go and draw down. And then you say, oh my God, trading sucks. It's a scam. These market makers, these brokers, all this, that. No, no one told you. You didn't have to buy up here. But when you do, you got to live with the consequences. Same with these sellers that sold the lowest point. That was a black candle. They sold prior to it closing. That was an impulse. And then look at what it did to them. And now they're saying, oh, the market sucks, this, that. No, but when you look back at it, you were selling an impulse at the strongest point of the day, the opening balance. Like sometimes maybe if you just waited for that candle to close, you could have possibly bought instead of sold. Shit like this happens. And look at now how it took out the daily high. Now you got strong selling pressure entering the market. Okay. Did it just sell up here just because? I'm sure that there's something going on around here in the past. Like if I start to dissect what's going on over here, here was a big move, came up, down. There's where it kind of topped out. There's more double tops, more in here. There's another kind of bounce. See where it came right in here. Came back up, back down. And then if I look to the left, I can see it was a wick there with the volume closing below, a wick there. So 48,011, that looks like an interesting point right there. So if we go now into today's market, you can see that there's that red line right up there. So they're lowering it to lower high, so far coming right back down. Now I wait for this body to close. Remember, this was a purple daily high. So that's how far we've extended above the daily high. They could be trading up here, grabbing pending orders. It might come back down, close below that purple line, come back up, and then Wall Street sells the move back down. These are all things that we got to watch. Same with NASDAQ. Came up, coming back down now. Remember, 90% of trading is analyzing and observing. You might be in a trade for 10% of the day. The other 90% is you're watching, you're analyzing, you're observing. That's what trading is. Like everyone thinks just because you say you're a trader, that means buy, sell, buy, sell, buy, sell, buy, sell. You're constantly in and out and you got 100 screens running and this and that. Not necessarily, unless you're one of those speed traders. But normal trading is you're waiting for the opportunity for a good setup. That could be 70, 80, 90% of your day. If you're doing a 2-3 hour session, 2 to 3 hours of that time might be waiting, watching, observing, and then finally you take a trade, right? And there might be days where you don't see your setup and you have to live with that. You got to know that that's a day You watched, you observed, you looked for your setup, and it wasn't there. That does not mean, I got to get this through to you guys. That doesn't mean you just force any trades now just to say, oh, I have 1 or 2 trades a day, 3 trades a day I take. Just because you haven't taken it doesn't mean you got to force trades. That's it. That day had no trades. Maybe tomorrow you'll get your trades. But the markets are open every day. What's the rush, guys? Even with prop firms, you don't have to finish these things in one day. You guys are setting these unrealistic results and pressuring your own self. Some of these prop firms you can finish in 1 week, 2 weeks, 1 month, 2 months. What's the hurry? Why do you have to pressure yourself to finish it in 1 hour or 1 day or 2 days maximum? Some guys in our group bought prop firms on Friday and wanted to pass them all on Friday, and they blew them up. And I'm like, what are you guys doing? Are you even trading? Like, what? We're gambling. We're at a casino. That's what we're doing. Trading is already as difficult as it can be. And when you keep putting additional pressure on yourselves, you're making it worse for yourself, nobody else. You're not making it worse for a broker. You're not making it worse because they're going to get their commissions. They're going to get their spreads regardless. Prop firms want you to be that type of trader because they want you to keep failing and keep paying for evaluations. That's how they make their money. They don't want you to be patient. They don't want you to be disciplined. So just understand, take it easy, guys. You know, that's why I tell traders all the time, at all ages, I don't care if you're 18 to 100 years old. If you need to work on the side while you're trading, it's good, okay? You're not going to be a multi-billionaire and driving Bugattis and living on islands all day, okay? You got to understand, a lot of traders, 99% of us in this group have other sources of income. You work. You have businesses, you got family, you have to allocate and balance everything in life. If you need to work while trading, work then. So work will take care of your bills at home so you're not have that additional pressure. And then you can allow trading to just naturally occur where you don't have to force yourself. I got to make $100 today because I got to go put gas in the car. No, that's not real trading. You got to just let trading happen naturally. Then you'll understand, the more experience and mature you get, you'll understand what I'm saying, that it'll just come naturally. But if you keep forcing yourself or making these pressures on yourself, it's not going to be good. You're going to suffer. I've suffered like that. Most of everyone on our call has suffered, not just on our Zoom, on YouTube. You guys got to understand what I'm saying. If I'm not, then I'm just speaking for myself. Then no one can relate to what I'm saying. If that is the situation, tell me. Then I won't even talk about this shit anymore. Then maybe I'm just talking for myself. How I really learned how to be consistent in trading was when I had that chip on my shoulder and I took all that pressure off. That's when my trading changed. I'm telling you guys, because I gave so much pressure on myself. And then I realized over the years, this is too much pressure. No one can sustain this type of pressure. I quit everything I was doing to just be the sole bread winner in my family. Like my wife wasn't working, 10 years at home with the kids, you know, and I had so much pressure, newborn kids. I got bills to pay. I got, you know, like that's why I was trading all sessions. I learned how to trade London, Tokyo, New York. I learned how to trade Forex, futures, stock options, everything until I found what works best for my kind of balance in life. And when I put all those pressures on myself, I said to myself, this is when I was suffering the most as a trader. And then when I started to say, this is not trading, and start to, you know, figure out other things, then trading just fell naturally into place. I hope this helps, guys. I know it's a lot of talk, but I'm talking from my heart. I'm talking for real, guys. It's not, I don't want your views. I don't want your likes. I don't want your subscribe. That's not why I'm talking like this. I know what you guys are going through. I've gone through what you guys are going through 100 times worse than you guys. So I know, your uncle knows. You know, when your uncle is just trying to give you some advice, there is some of those uncles, you guys have them. They've been through shit and they just want to give you guys advice. I'm not doing this for popularity or this or that. I don't give a shit about that. I'm just doing this to give you some honest uncle advice. That's it. Because I know a lot of you guys are younger than me. And you guys are learning the wrong way of trading. So I'm just trying there to pivot you in the right direction. And if you guys don't believe me, I'm teaching my kids how to trade, okay? So I'm not just doing this with you guys, I'm teaching my kids, but I don't teach my kids about how much money you can make, about cars, about lifestyle. I teach them just, can you cut a candle in half? Can you figure out where support, where resistance is? Can you see, are these candles trending or are they ranging? Just something very easy for them to follow. Nothing complicated. I don't have them hitting a buy or sell button. I don't even introduce buy orders or sell or nothing. I didn't even tell them that you can buy and sell in the markets. I'm just showing them which candles are bullish, which ones are bearish, which candles to focus on, those dog shit candles, or are we focusing on the ones with bigger volume? So it's a game for them. It's just like blocks. Very easy for my daughter. Okay, so now we are 6 minutes away from 6-7 minutes away from Wall Street market open. There's going to be lots of volume coming in. Let's just go over our news again. Do we have any news coming out released at 9:30? Always get in the habit of double checking, guys. We have no news coming out today for Wall Street. Earnings, we have no earnings this morning. Anything going on in finance over here? Okay, this is Bank of Canada rate cuts. This is Canadian news. Trump says we'll see on whether to restart trade talks with Canada. But I don't think it's up to Trump anymore. I think Carney has already pivoted away and made his move. Now it's Trump is going to come possibly begging back to negotiate. Okay, I was surprised by that. I'm Canadian, and I didn't think Carney had the balls to do that. To tell you the truth, I was shocked by that. But I guess he's made negotiations with other countries around the world that doesn't need to rely on the U.S. So that's how countries might be moving forward. You know, he didn't get in an argument with him. He didn't, just simply just said, we've moved on. That's it. It's kind of like a relationship. It's not there begging. He's just moved on. And we'll see, like right here, what they do. Okay, so no real news. Again, just in the U.S. markets right now, E-mini, S&P is up 0.2%, mini Dow, nothing, 0.1%. NASDAQ up 0.3. Nothing really going on in the markets right now. So we just got to continue to focus on. And there, wow, guys, look at gold. We had to sell 30 pips right down to the opening balance. And look at it, came all the way back up right to entry. You guys understand. Wow, like unbelievable. So what I would do is just clean up the gold charts now. Get rid of these cut lines. Focus on your zones, right? Again, just clean up, tidy up. I tell my kids all the time, when you're done playing with toys, tidy up. Tidy up time, that's what we got to do too. So you can trade off of this block, this block. If you want, get rid of this one because now volume might open up. Focus on this one, some positions here. 5-minute trading, I see right here a neckline. There was a body, right in there. But if you're watching gold going into 9:30, there's going to be some big moves because the US dollar moves. So you got to factor all that. Guys, we're going to go over here. We're going to be watching this. So you choose your security, US30 or NASDAQ, whether we take a trade or not in the next 30 minutes. We'll see. Again, I'm not risking my entire daily profit on the gold trade now to allocate right now just to US30. If I see a trade, I take it, but I'm using a small percentage. I'm telling you guys ahead of time from my winnings. So if I get stopped out on NASDAQ or US30, that I still can walk away with markets with a smile on my face and I've made some money. Okay, I want you guys to know that. So I'm really reducing my risk right now. And another final thing is, let me just see what's going on in the pre-market for some security names we're familiar with. Oracle is up 2% pre-market. I don't kind of call names that are flat. Micron is up 2.25%. Everything else is pretty flat, like up a quarter, down a quarter, up 0.5%, down 0.5%. Nothing real significant. Tesla is down 1.5%. No big earnings today, so nothing jumping in the pre-market. So we might just get a regular market open with some volatility. And now we have NASDAQ, okay, coming down. So you can look at it as two tops, okay, came up, there, back at double top. There's the M. There's your big move coming down. Will it close below? Will they pump it up in market open and then drop it back down? Are they just bringing it down now to bring it back up, and then it goes right through here? US30 too. If you were in buys, secure some volume, secure some money, because what goes up can come right back down, right? And that's a nice move on US30. That could be like your daily goal. For example, if you bought coming out of here up to there, that's 30, 40, 50 pips, you know, but maybe it's just me saying that because I'm more of a scalper and I got that scalper's mindset. But you saw in the gold trade, we didn't necessarily do that. We held and we followed the entire move. But here we go. And mind your spreads if you're trading Forex. Watch your levels, have some rules. Some of you guys jump in right away as soon as the Wall Street market opens. You might be in a trade already or going to trade. Some traders wait for a first 5-minute candle to close, others a first 15-minute close. They find opening range balances of walls. All of these things you could be looking for, but have a plan. Have a plan. If you're trading with no plan, I suggest don't even trade, because you have to have some sort of plan. You can't just guess every day. Guessing can only go so far. Yes, you can go on a guessing streak and do really well by guessing, but to sustain that over time consistently, I'll bet against you on that. And I'll probably win most of the time. So you have to have some sort of systematic approach to trading every single day that you can follow, and it's your routine. Then you know whether you're following your routine or you're deviating away from it. Then that should set an alarm going off. I'm going to wait for the first 5-minute candle to close regardless. Okay, I know I'm going to miss out on maybe a big bearish candle or a big bullish candle. I understand that. But I'm going to observe, watch, look for clues, see the volume, maybe figure out points of interest, points of control, all of these things. I know some of you guys are going to hate me for doing that, but it is what it is. Okay, so now it's selling. That's pushing down. Look at the daily candle. The daily candle is nothing special right now. It's a spin top candle for Wall Street market open. So I can clearly tell you how much indecision there is on the daily. There was buyers, there was sellers, and we're right exactly at the opening balance. So if this was a 5-minute candle, I wouldn't be interested in trading this. But right now it's Wall Street's volume. So look at what they did to all of those buyers. Okay, so US30 is dumping. NASDAQ is bullish right now. These are not the same securities. We have a big drop here. And that's a very bearish candle. But again, you see those buyers there? If they did nothing, you see what the market can do. NASDAQ has hit the second top up there. Look at the wick and that wick at the daily high. Okay, so keep your eyes on NASDAQ as well. And if some of you guys are in a sell, congratulations. If some of you guys are in a buy on NASDAQ, congratulations. And look at gold, again, right back up to that point of control and now selling back down. So when you establish zones in trading, you could literally trade off of these zones all day. All day. That's what I do. I set alerts at these zones all day. Sometimes I trade them, sometimes I don't. But you're always going to get alerted at good probable areas. Okay, so that candle has came all the way down to this point of interest. Now continuing to break down. Unbelievable. So we broke in today's low. All it took was first 5 minutes of Wall Street to break it. So now we got to see where will it close in the next 2 minutes and 45 seconds. NASDAQ has taken out the daily high and still bullish. Okay, so this candle is still pushing down, still bullish. Remember what I said, I'm waiting for the first 5 minutes. Okay. So this is a clear candle that everybody should be able to cut in half and figure out a point of control, whether it's a bullish one on NASDAQ or a bearish one on US30. Okay, that should be first thing you're doing. Well, what I'm going to do. Okay, so easy way of doing that is opening balance, closing balance, fib tool if you have to be exact, is what we're going to do is figure out the levels. Okay, and that's what we need to do in order to keep trading. Look at NASDAQ came right up to that daily point of interest, exactly that yellow line. Remember, where did I just get this yellow line just because? No, remember the top-down analysis? So if you're in buys, look, it came tapped right into that yellow line. Exactly, like exactly to the tick and rejected. So that's why, guys, it's line-to-line trading and really to be specific at these higher time frame lines. If you don't, this is what can happen. And see, now we're stalling right here at this yellow line. And we got to close in 20 seconds. Wow, look at the rejection on NASDAQ there. Okay, so we remember this momentum could follow into the next candle depending where these buyers close it out. Are they closing above this volume, back above that purple line? Okay, look at where it closed, right at the purple line. Okay, so it could come back down into 50% of that candle, find support and go back up, but it's got a big wick to fill. So sellers are still here. This is where it could now gain a little bit of support on the 5 minutes. But remember, you could be counter trading. You could be counter buying against this big bearish candle. So first thing, open close of it now. Okay, so 50%. I'm going to cut it right there, 0.5. And the zone off of that candle is right there. Okay, so you see it's blue, blue, blue. Did not transact in there. They're already rejecting down. Now will it refuel itself to come back through here? If this thing sells down, it could break and continue selling down. But it's got that yellow daily point of interest right there. So let's just continue to move this into future. This is where we could consolidate. This is where it could build. It could come back down. Maybe a second leg is a better leg. Maybe a second bottom produced there could give us that extended bullish volume breaking through there. Or it could just come up here. And when it comes for the second bottom, sellers are just continuing breaking it down. Okay, so right here, NASDAQ is also being held up right here at where? Cut line, 50%. There's where it's being held. Gold, yeah, selling offer, and then respect this green box back down in here, right? Look at that red zone, green zone, down, up, down, right? Are we still patiently waiting, or has anyone entered into a trade? We have 2.5 more minutes to go. So this 5-minute candle is basically half is gone. Okay, so they've already rejected it. Shooting star candle. Has anyone entered a trade as of yet? No? Okay. There's nothing wrong. I'm not in myself. Okay, I'm just observing, watching. I know that this is bigger volume, so you really have to reduce your sizing because these are big body candles now. So you got to, if you realize some drawdown, you can't panic, right? This is where you got to know to lower your position sizing, whatever you're doing. This is now Wall Street coming off of a weekend. Quick sells, Gwendolyn. Nice. You got the bear shooting star. You have a nice body falling on NASDAQ off of that wick. So let's see if they close strong now, if the sellers can close strong. That's a great candle. Okay. I was contemplating on selling this, but I was waiting, if it would come down, would it get a wick and go back up? But maybe this one can confirm to me, breaking the low. I could also maybe look for a trade on NASDAQ. However, just waiting. I could wait patiently to sell back. Maybe if it comes back up, sell this block, sell at this yellow line. If it comes back up, it could retrace. I could buy it back up to there. However, this is big selling pressure. It's difficult to buy a big bloody daily candle. NASDAQ came down, got a wick right there holding. You see how Wall Street can negate everything? Look at all of this volume that was trading from, wow, the end of the day on Friday, right there is 7 p.m. last night, all of Europe. And then all it takes is 5 minutes of Wall Street to open up and negate everything. It's kind of that's what you call liquidation. There used to be a store back in the day called Liquidation World where everything was cheap, all type of shit in there for a couple dollars. It's called Liquidation World. It closed down, but this is Liquidation World right now. Just liquidated all the buyers from the entire night. So even swing traders, everyone getting liquidated on that. And all it takes is first 5 minutes of Wall Street to do that. Okay, so that was a big bearish candle closing. Can we cut it in half right there? Are we going to continue to push down with NASDAQ breaking? This closed below right here, so green to red momentarily. Okay, so it's finding a little bit of support there. Maybe you can sell back up here, sell here. It's coming right back up. So maybe US30 will build its way back up, maybe test this, but maybe better selling opportunity is maybe the higher block that hasn't been contested yet. That's near the previous daily low and where the 9 EMA is located. Or maybe if it just tests here, it's got further room to continuously drop. But, it could come down, find a bottom. Then I look to see it come back up here, maybe there, then get that next leg pushing down. I know I might be missing out on a sell right now, but I could be patiently waiting for the pullback. That's what I'm trying to make everyone understand. Yes, I could sell this quickly, and it could be a quick sell just coming down and get a wick and return right back up. But maybe I could look at a sell here. We haven't transacted in this, so I'm adding an alert here. Whether it's in the next 5, 10, 15, 20 minutes. It might be later. It might be at 10:30 today. But at least I know we have not still came back and tested this Wall Street block right there. So when it comes down, that could be the push down. I got to wait for it. That's what trading is. Patiently observing, finding the block and waiting. Or we could, I could look to maybe look for a buy. If there's buyers that want to buy down in here at this green zone now we're reaching a nice daily point of interest deep into this green zone where we could see buyers. We've seen a massive liquidation. So sellers are bringing it down and we could get a buyers rotate it right back up. I'm not looking maybe for a rotation to come all the way and go to all-time highs, but maybe just come test here. That could be about 50 pips in profit depending on the volume. If it comes up there, better believe I'm doing something up there because that's where it could drop back down. So, but it is still a falling candle. So it's still selling. And NASDAQ is breaking. You might get a first bearish bar close below this level because I see a wick, a wick, a wick, a wick, and a wick. This might be the first one that closes with a body below there. Okay, so it looks like we found a little bit of support right there so far, 47,777. Kyle, I'm going to read your question. It's kind of long. Out of curiosity, do you establish a daily bias prior to trading, which gives you a slightly leaning weight whether you buy or sell, or do you entirely decide price action wise, zone to zone? I know you trade by price action, etc. I trade zone to zone, yeah. But obviously, like there's a big bearish trend, but if I'm buying, I know that I'm counter buying. That's why, like I was saying, if it comes right up there, I got to do something there, because that could be where the seller's pushing back down. If it comes all the way to that block, you better believe I'm doing something there. But yeah, like I'm trading from this block to that block to that. I try and go with the daily as much as I can, but remember, the daily is, this candle is still going for hours here. I'm just trading for a couple minutes, right? So I can only use the daily bias somewhat, because I could just be looking to buy a blue candle just coming out of here up 50 pips. And the daily candle is still a huge bearish candle. I'm not looking to maybe flip this entire bullish candle. It takes a lot of volume to do that. But, you know, if I get a big move like that, obviously I'll take the big move. But I'm just looking from buying at certain locations after an extended play, selling at good areas at premium levels after an extended level, and things like that, right? While managing my risk. I try to trade with the overall time frame as much as I can, but sometimes when you're trading 1 minute, 3 minute, 5 minute candles, you can't really go with what the daily is kind of doing. Hopefully that makes sense. I don't know. It makes sense in my mind when I'm telling myself that. I don't know if it, you know, if you guys understand that. If you have a daily bias, then I would suggest trading with higher time frames. If you follow your daily bias, like daily candle, and stick with it, then don't be focusing on 5 minute candles. Focus on your 1 hour, 30 minutes. Stay there, because those ones hold more weight. Then you won't be kind of, you know, switch with these 5 minute candles. Because right now we got a nice bullish candle building. It's going to close now. 12 seconds, but sellers could fill back down that wick and drop it even lower. So we got a nice hammer coming out of here, testing back up through here. NASDAQ is really nasty right now. Okay, so I see that it closed below, so it's black. So will it come back down, or will it be blue and just advance and then trade back up to this block? And then I place kind of my stop loss below here. But it could come down, but I see it is building right now. So it's black. See how it's still black? Daily candle is still black. So it could continue to fill back down here, but this is a big wick. It's not a short wick. So even if it comes down black, I might see a higher low come right back up and bring it right back up, but we're still below this red zone. Okay, so there's a wick. And this is a new 15-minute candle as well. So now it's 9:45. So we might get new 15-minute momentum coming into the market, could switch this up and just take it back up to here, and then it sells right back down, right? So I'm just taking it from this zone to that zone. Okay, so it's still holding. See, it came down, got a higher low, just very thin volume right now, considering to how much volume we just had in the market. So this is kind of suspicious volume, the way how they're just holding it right here, because they could entice buyers, and then they got one more leg that they want to squeeze it back down, but it's still holding now. So this is where you got to ask yourself, do I trade on impulse now? Do I take this? It's building, it's a hammer. It could continue to drive right through here. Okay, so it is holding. I'm going to buy this thing. Okay, so it's holding. Stop loss placement. I could be right there if I want it to be tight and just go right into the profit, maybe just, and look at what I'm doing. I'm extending it right into 50% of that red block. Stop loss, I could be right there. If I want to give it room to breathe, if it comes back down, I could leave it right below that previous low, the last candle. I'm close to that daily point of interest. I could go even lower, but that's good enough risk just to take it up to this red box, maybe extend into it, okay? So if I measure it now, so I know I'm already like in the money, but it's only 10 pips, 15. You know, if you're just looking for quick 20, that's how I scalp. Quick 20 in and out. Boom, boom. I would have normally closed this trade by now or been at break even, but I want to run it up to see if we can fill that wick, because that's 35, 40 pips to the upside. If it gets back up to that daily purple line, that's a big significant purple line. That was the previous low. That's 45 pips. That's when you're controlling. If we trade in there, it's 60 plus pips just on that. Right now, I'm going to go to a break even right now. Sorry. I'm going to adjust it on my mobile. Okay. I'm going to a break even right now on this trade. Why not? Why not? We've already had a good day. Let's protect our capital. Now we're up 40 pips. I have no emotions now. I'm at break even. Worst thing is I give up 40 pips to the market, right? And I know that it could sell back down with that leg. But if it continue to build and extend out of here, maybe this candle wants to contest this red box. I'm willing to gamble on it to see with the remaining 2 minutes at a break even to see if it can get up there. Okay. With this volume. And then I know we're retracing back up to the Wall Street block. But if you guys want to take some out, you're welcome to. But I'm managing risk, break even on a scalp. I'm not looking for swing trading is later this afternoon, later this evening. This is just a 1 bar. Grab your 20, 30, 40 pips and get out because we're counter trading this. But if we're continuing to hold, got to follow this 90 more seconds. This is where our resistance is right here at this 885 area. One more, just one more buyer's just ask up here can advance us into there. Then it turns into 50 easy pips. Wow, while NASDAQ is bleeding out, okay? So this could just come back down, sell off. I'll verbally let you guys know as soon as I get taken out at break even. I got my level already set. Hopefully we get one last push on this close of this candle with 60 seconds to go. What a fight in this candle. My goodness. Still in it. Wow, they came really, really close to tapping me out there. Still in it. Closing in 30 seconds. It's still building up a little bit, but man, there's a shit ton of resistance up there. But if we can break through this, wow, okay? What a tough block to break up there. I'm still in. I'm still holding it. I don't know about you guys, but I'm still in. They didn't get my break even. But here's the close. 5 seconds. 4, 3, 2, 1. Close with some bullish volume. One ignited bar. Can we get it? It's ignited. It's ignited. It's ignited. Can it just continue just to ask while it's ignited and hold that, and just build and fill up those wicks? As soon as we lose that opening balance, then unfortunately it's going to come back and contest 50% of this bar. And that's where my break even is. So we didn't get that big bullish move right out of the opening balance. It came down, picked up a little bit of a wick. So can buyers be there to pick it up real quickly? We did close above this red zone, but unfortunately I'm right at a break even in there. So now it's coming right back down to contest the break even. I'm still in it. Good wick there. Holy. Still in, still building. Now we're building to break those wicks and maybe get our reward into that bigger red zone, and then it's a 60, 70, 75 pip trade up in there. And then definitely I'll be clearing out some profit, but we're struggling up here. Man, why is it struggling so much with this area? There we go. Can we clear those? Okay, so we've cleared it. There's our now imbalance. We're filling. So that purple line is 46, 40 to, I would say, average 45 pips up there. And then if we start breaking, you can see 50 plus up until right in there. So I don't know how I escaped this, but the brokers did not tap me out. If Fusion was watching me live, I'm sure that they know where I am. If I miss me, now you got to kiss me. Now I got to get paid. Now let's see if we can break for that higher high and get through there. All while NASDAQ is selling off, you know, like, can we just get that nice push right through here? But we gotta understand that it could just come there and then drive that leg back down. And then you're testing the zone again, maybe another double bottom. That's why I want to test the true neckline, Wall Street's block. That was the 930 candle. That's why I'm still in this, because I feel like that's the true block to trade into. And we may get that push, okay? But purple line, that's a great location. That's 50 pips right there. Okay, that's when you should be doing something at 50, okay? I'm going to do something. I'm going to take out 80% there. It's been a hell of a day. Good trading day. Start Monday. I took out 80% right there, and I'm happy. Now I got the remaining 20% at break even. If it wants to contest in there, it'll continue to go. Guys, did anyone manage that trade with me okay? Or did you get stopped out? I told you I was going to a break even really fast, but I escaped that. So by a hair. Like I have barely any hair left on my head. That's how I escaped that. By a piece of hair on my head that's left over from all of this stress. Kyle, you stopped out with breaking. It happens. It happens. You know, I trade with a different broker, different spreads, all that shit. So it's completely different, guys. I'm telling you, got to get a good broker. If you're not trading with a prop firm and you're not in America or in Ontario, Canada, where I am, because I'm grandfathered in with this broker because I started with them 15 years ago, Fusion Markets. I'm not affiliated with them. I don't get a penny from them. Go with Fusion Markets. They're solid. You can take my word for them. I'm not affiliated with them one bit. I don't care if you go to them or not, but I'm telling you, they're solid. They don't play games. I've never had a game in 15 years with them. Never. Not like if I give them a rating, 5 out of 5 on Trustpilot, and I'm putting my name behind that, like I'm putting my reputation behind that, getting nothing in return from them. So they're a solid broker right there, tapped right into 50%. So it's like clockwork. I'm going to close the entire 20% remaining there. I'm happy. We've reversed into that block. That's it. That's all I wanted on this trade. That was from destination point A to point B, what I wanted. And that's it. I'm not looking for anything else, right? So I've closed my entire remaining, the entire balance right there, right in 50%. And I don't play a would've, should've, could've game. I don't, okay? That's how I trade. Love it or hate it, that's how it is. But it works for me. I've extended my daily goal. I could even take tomorrow as a day off, but I'm not. We're coming in later this afternoon to help swing trading education. But you guys can see, measure it, just like a carpenter measures the move. Top of the red box is 80 pips up there. See it closed near the high? We didn't close above it to make it a red to green box. If it pulls back, figure out the point of control of this big bullish candle now. If you can't cut it in half, real quick, grab your Fibonacci tool. Look at the cut line. 50% is the purple line now, the same purple line. That was our previous low of the day. The cut line is now the purple line. So if you draw like a point of control, if it comes back down bearish, you're trading into that bullish point of control that could hold this trade back up right there, right? But you're still trading in the Wall Street red block right there, okay? So that's how you can kind of trail it behind. I don't know. I feel like US30 is trading much better than NASDAQ. I like, guys, believe me or not, I'm not that person that just knocks on NASDAQ just because I trade US30. I'm being honest across the board. Look how clean it looks. It bled right out and then came right back up and returns right up perfectly, right into the block. That's it. Guys, hit the likes on YouTube. Subscribe to the channel. Like, we had a great day today. In my opinion, today was a great day. I don't know how you judge your days, but today was even gold. The sell on gold, and then look how it's respecting these levels, came right back up, red block, back down, broke the green, but look at where it kind of picked right back up. So this could continue, lower highs. Gold could close below here, and then look at the daily candle flips, and gold could be selling all day, the rest of the day today. But guys, in my opinion, like whether we took trades or not, it was a good day, good learning today, fantastic day. We're going into 10 a.m. Also, guys, don't forget, we have a swing trading education for Tokyo Monday, Tuesday, Wednesday this week. Join us if you want to learn all higher time frames. And then I know it's going to be a tough call because everyone's going to say, Ron, scalp, gold's doing this. I know it's going to be doing that. We've done gold in Tokyo for the last couple months. We know there's going to be big moves, but we're focusing on higher time frames. I'm not even going to go down to the 5 minutes. We're going to do monthly, weekly, down to the daily, and then just watching 4-hour candles. We'll set ourselves up with good points of interest, zones, alerts. We'll monitor it tonight, tomorrow, and Wednesday and see how things work out, okay? And I'm going to leave that chart all week. I'm not going to erase it. I'm not going to delete it. So come on tonight and we'll learn how to do it, and we'll keep the chart all week, okay, guys? But let's watch where this candle is going to close now. Name me one thing in today's chat that you learned today, that you learned something new today. Because I always say, I guarantee you on every single call, you will learn something new. Did you learn anything about yourself that was new today. That's how you get better as a trader. You keep improving from how you were trading on Friday. You improve from what you did last week. Any small minor improvements you make as a trader, those are positives. Those are good things. You know, you got to always be a better person, a better trader than you were the day before. I've learned from my, like right there, I learned that I was very consistent on this trade. Today I was trading with a rather tight stop loss all day, and I thankfully I didn't get tapped out, because it would have been demoralizing for me if I got tapped out, because a lot of those trades ran nice profits. On this one, on the gold one earlier, it probably would have affected my mindset the rest of today and how I trade tomorrow, all of these things. So I look back at those things, and I reflect on those things. Mark, you learned to buy a new coffee machine. Cheers. It's a Miele. It's a really nice machine. Anyone in my area, London, Ontario, if you need an espresso, coffee latte, a macchiato, iced coffee, espresso shots, I got you guys. I'm a barista. Is that what they call a male? Is a barista or a baristo, or what do you call a male? I don't even know. Is it a baristo, a barista, a barista? Isn't that a female one? What do you call a female? A baristas? Both? Okay. So it's gender neutral. Okay, good. Then I'm a gender neutral coffee maker, a barista. Gwendolyn, focus on your zones. Grab the blue. I usually hold and end up in draw. Okay, focus on zones. 100%. Always, that's what I do. I'm a zone-to-zone trader. I focus on zones. So you guys know why I took out my money in that red zone? Because it's still a big red zone. And look at now how it's coming down. So this could come all the way down, and I'm left with nothing. So that's why I don't play the woulda, shoulda, coulda game, right? So you always have to have a plan. My plan was to take this trade. I know I'm counter trading into the Wall Street block. Those were those arrows I showed you. It came down, it came right in there, and now it could come all the way back down. Then test this. If the buyers are not here, then look, then it's a new lower low and coming back down. If it produces like a double, I could trade off these all morning like this if I wanted to, and just play off the green block, red block until volume closes above or below one of these, and then I just continue to trade with it. So you can see, guys, if you didn't do anything in the red block, unfortunately, this is what happens. I'm telling you, it's like clockwork on a daily basis. I don't make this stuff up. I can't make this stuff up because we're live every day. So you can see literally for yourself. Now, did I do a mistake taking out the full trade in there? No, I didn't. So, I'm very happy with today's outcome, with today's trading, the way how I personally traded today. I'm very happy with it. And look at gold now off the charts. Okay, so look, it came all the way back up. Boom, liquidation world up there, closed below and dropping. So if you're going to continue to trade, this green block is now red block. Bring it into the future. Tidy up your charts, get rid of your cut lines, focus on higher time frames, and just continue. Look at below the purple line to that yellow line. That's going to be a big drop. But what's going on? Look at that wick right there. That was the last 5-minute drop right there. It's broke right now. And then look at where you have a lot of 5-minute right here. I'm going to use a white line because I know that this is on the hourly. This is a long time here. There was when it came down, back up. Came down, back up. Came down, back up. Right here. You got to watch today. 4,185, 186. Right now, if it bleeds all the way out to that white line. And then your next daily point of interest is right there, 4,175. Look at your daily now, okay? Look how this shit played out today. Wow, okay? So it came up earlier, the big drop right there, came up, look at right into that red block, back down right there. Then they brought it all the way up 955, liquidation world, 10 a.m. Now they're physically breaking it down. Holy shit. Gold is trading unbelievable lately. Now go on the daily and look at the daily. Look at this thing. Remember what we said on the daily? Where we were trading? This could be the swing trading sell setup. Look, it came up. Look, it rejected. Now you got a strong shooting star daily candle that could physically, all week this week. FOMC could affect this, and we could get strong selling on gold this week. If you look at those 4-hour candles, Look at it now, how these 4-hour candles came up, back down, tested into here, back down. Now your 4-hour candle could be extended and really start filling these wicks behind, and we could have a big selling on gold. Look at today's daily. Candle has flipped into a shooting star. 4-hour are dropping, and we could see significant selling on gold with counter buys, obviously. But this is very bearish, in my opinion, gold right now on all time frames, starting with the daily, 4-hour, everything. Okay, holy shit. That's a big drop. And whatever you're gonna do, continue trading, guys. Have some plans, have some routine. I'm done for the day. I gotta go continue make another beautiful coffee and get my son ready to get the braces off because I'm going to be at the dentist for over 2 hours today. I was hoping to hit daily targets so I wouldn't have to be scalping in the dentist office today. So I don't have to do that, but I'll see you guys tomorrow. No, this evening. What am I saying? I forgot what the days are. We'll see you guys at 6:30 tonight, 6:30 p.m. for our swing trading session, 6:30 to 8:30 tonight. Join us, all swing trading. Free blogs available to all of you guys. There's a free Telegram channel pinned at the top of the channel. Read a little bit about NVIDIA, swing trading. Read this before tonight's session. And you got market outlooks. We were talking about stock splits last week. Netflix just did a big one, 10-to-1 split. Learn what those are. And the free Telegram channel is right over here, guys. Abdul Rahim, your target is hit. Bless you, brother. Good job. And also with the trade signals and setups, shout outs to SST Big Dave over here, holding it down with the gold sells, to notify us of that location, 4215. That's why, guys, we work together as a team. We have eyes on the charts, on locations all day throughout the day. With proper risk management, they do work out, and we work as a team. That's what trading is, guys. It is a very individual game. I understand how it is to trade by yourself, but it's nice to trade with a community, bounce ideas off each other. Some of us are going to have different ideas. You saw I was in a short little buy today, but I switched focus. Remember, I took myself out manually. I realized 8 pips of drawdown, and you see how I turned it into a very profitable day. I wasn't having my ego against me and saying it's only my way or the highway. There is some traders like that. You got to understand markets move very funny every day, but you got to look. If you're not getting what you want, then close the trade, manually close it. Protecting your account is the best thing. You don't have to sit there like a duck in the market waiting for your stop loss to get hit. You can adjust it. If you see that the trade is not going in your direction, you're not getting that closing balance, it's not respecting your points of control, you don't need to continue just to stay into the trade, right? You can save some pips to apply them on another trade and to get those 8 pips back. But anyways, good job over here, guys. Crypto as well. Crypto's in the markets today. Bitcoin, we should see maybe a bounce on Bitcoin at these levels, 80, 90,000, but there is further. It can come down to 65, big block in there if it gets tapped in there. But Bitcoin is interesting going into the new year. Bitcoin loves any Fed cuts, any printing of money, because then that's more money to come into Bitcoin. Holy shit, gold is just flushing the toilet right now. And look at the Wall Street block. Again, would have been a nice sell right up there. So that's why, guys, if you're counter trading, we had that buy right into there. I could have closed out my trade in profit buys, which I did. And then I could have been selling this leg down because I'm selling now the natural pullback into Wall Street's block. Guys, it's like clockwork. When volume is trading this nice, like you could have sold anywhere here, stop loss could have been really tight. You could have kept your stop loss above the daily point of interest. And now you're selling this leg back down into here. You could realize that profit, or if it continues push down, you're looking down in here. It's the same thing, guys. But you got to know when you're countering a move or you're trading with a continuous trend. That's the only thing that you got to decide when you're trading. Are you countering or are you trading with the trend? That's it, and then that will make you maybe extend a trade longer or to know to cut a trade. And if you're countering or with the trend, sorry. Okay, guys. Hopefully everyone had a good session, learned something. God bless everyone. We woke up healthy on a Monday morning. We're good. Health is wealth. Go now, enjoy your day. Go to the gym, go for a walk, make a coffee, eat something healthy, and do something good with your day, okay? Put a smile on your face. When you smile, you're going to make someone else smile. Don't be those grumpy Karens out there. Just smile at someone. Smile to a stranger today. You'll make their day. Say, how are you? You look beautiful today. Watch. They're going to give you a hug and a kiss. They're going to love you. Just be a good person. Karma comes back and will give you good things. I believe in that stuff. And if you had a bad day in the markets, lessons are blessings. Make sure you learn from your lessons, okay? Because if you don't learn from them, you're not going to get blessed the next day. So lessons are blessings. Make sure, I know it sucks, but every day in life is a lesson. Learn from it and you make yourself a better person. Amazing. Rob, 50K is the best. Oh, you're talking about the accounts. Okay, guys, have a good day, everyone. We'll see you guys later this evening for some swing trading education. So have fun the rest of the day, and we'll see you guys tomorrow. Shout outs to everyone on Zoom. Shout outs to everyone on YouTube. Thank you guys. If you guys can kindly leave us a like on YouTube, we appreciate it, and subscribe to the channel. We are in a bullish uptrend, hitting hopefully all-time highs to our $100,000. I wish it was 100. I look at this as 100,000 competing with kind of Bitcoin. Are we going to beat Bitcoin to 100,000, or is Bitcoin going to hit us to the 100,000 marker? So we're competing with Bitcoin right now. Let's see if we can take it above Bitcoin. What is Bitcoin trading at right now? Let's see. We're at 90,604. What is Bitcoin trading at? BTC? 90,658. Oh shit. Who's going to hit 100,000? Bitcoin or SST? What are the, anyone want to play some bets? That's funny. We're trading right at the same right there. Okay. Either us or Bitcoin. Who's going to hit 100,000? That's hilarious. Hopefully both. Yeah, I would love that. But guys, have a good day today. We'll see you guys later this evening. And if not, don't forget tomorrow morning. Dave is, if you want to join the team. Dave does live New York's 8 a.m. with the snipers in Zoom. And we got a post New York session 11 a.m. tomorrow. Okay. Have a good day, everyone. We'll see you guys tomorrow. Thank you, guys. Awesome session today. Have a good day, everyone. Let's see, us or Bitcoin? Who will hit that 100? Or both. We'll take both. Have a good day, everyone.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.